The top dogs, the only dogs. What's happening, chat? What's happening, chat? Oh, we locked and loaded, chat. We locked and loaded. Marcus is down, but we up. Marcus is down, but we up. All right, let's say hello to the Shred Lords. Let's say hello to the Shred Lords, and let me give you guys a little lay of the land of what's happening today, huh? Let me give y'all guys the lay of the land and let y'all know what's happening today. We out here getting it. Where my boy, where my Shred Lords at? Hey, chat, what's good? This black screen is just so, it's just so big. Oh, get rid of that real quick. Get rid of that real quick. Chat, what's good? What's good with y'all? How the heck we doing? It's Wealthy Wednesdays in this household. It's Wealthy Wednesdays in this household, chat. We out here just making a move, out here trying to get it. How the heck y'all doing, chat? Catch me up, man. Catch me up. You know what to do, man. Catch me up on y'all day. What y'all been up to? How y'all living? How y'all feeling, huh? Y'all feeling good? Y'all feeling healthy? Happy? Y'all happy, healthy, wealthy? How y'all doing, chat? What we got going on? Let me fix Twitch real quick. What's out happening in the world these days? It's a lot of like crazy news happening. Some good, some bad. Some software, some AI. You know what I'm saying? What day is this? Hey, chat, W day or L day? What? Catch me up on y'all day. W day or L day? What's been going on? What's been going on? You already know my answer. Literally every day above ground is W in this book. But catch me up, man. W day or L day, chat? Let me know. Let me know. Let me know. Let's see. Reacting to Google earnings. What's happening, chat? All right, y'all want to see a lay of the land of what we talking about today? Let me show y'all Shred Lords, what we got going on. Let me show y'all Shred. First and foremost, I got quoted insurance. I got quoted insurance, chat, for the Portcos, and I think I'm getting ripped off. Hey, why they actively trying to bring your boy down, huh? Why do you think they actively trying to bring your boy down? We out here dealing with life insurance. We dealing with business purpose, personal property insurance, all kind of thing. Why they trying to bring your boy down like that, huh? I'm a little cafecito join that, huh? I got quoted. And let me know if this is normal. Like, keep in mind, I've been such a Shred Lord my whole life. I normally don't need these things. I normally don't use these things. I never pay attention to how much health insurance is. I just never really like thought about it. But I think my health insurance is like ridiculously expensive. The seller's rolling over equity, so we had to include him in the health insurance. He's a little bit older. They're literally charging him an arm and a leg times 10. And I'm like, what? So he's just gonna pay it privately, which is cheaper. We're just gonna reimburse him. And then for life insurance, get a look at this. For life insurance, which is required for this deal, I don't know why. They literally, for my life insurance, they literally told me one price, like $40 2 months ago. And then I submit my medical records. I'm as healthy as a duck, right? And I get the results back this week, and they quote me like $100. And I'm like, first and foremost, shawty, where did this 2.5x premium come from? And then this is what they say. This is what they tell me. They're like, oh, Kenny Finance, in your medical records, we saw history of melanoma. I didn't even know what that was. I'm a finance guy, not a healthcare guy. I looked it up. It's like a form of cancer. And I was like, I'm pretty sure that's not me, right? So I was like, you should probably run that system again, you know? So they run the system again, and they're like, oh, sorry, melanoma was just mentioned in the survey question, right? I'm like, all right, look, they're human. AI hasn't taken over every job yet, so we just can't assume perfection yet. And I'm like, oh, so it must have just been a quick little misread, right? I'm good, right? Where's my $40 premium? They're like, oh, not quite. We actually just found your cholesterol levels. I was like, bro, are we really doing this? So then I dive into my cholesterol levels. Apparently, chat, when it comes to life insurance, I was classified originally in like the premium star preferred, like top tier, which is just like super dirt cheap, right? The next tier under has like a fixed banded minimum for cholesterol levels, among other things. But like for the cholesterol level, the minimum cholesterol level to be included in the preferred rate is 120, whatever the unit is. My test results literally were 119. Chat. My test results were literally 119. I was once freaking cholesterol level away from like the preferred tier, and they decided to hike the premium 2.5 times. Kenny Finance is a good guy. Kenny Finance doesn't crash out. It's just not in my DNA. I'm a chill guy. I'm naturally chill. Nothing ever phases me. But I was slightly confused. I was like, this seems like a scam. You know what I'm saying? But my dilemma, chat, my dilemma is we need to have this life insurance wrapped up and have the bank labeled as like the collateral assignee, whatever they ask him, by Friday. I wanted to call every single life insurance company in literally the Western Hemisphere to get a requote and a better quote to fight for my right for better pricing. Mind you, chat, my medical records are as of December 2021. It is insane. It is literally December 2021 is when my medical records were. Bro, does she know how deep in the trenches I was in private equity? I was fresh off of like probably 2.5 hours of sleep, Celsius in my veins. You know what I'm saying? I did have an insurance broker. It was just, ugh. So, if anybody ever asked me, am I a proponent of AI-enabled disruption in the life insurance underwriting industry? I vote yes. I vote yes. I am a big proponent. Oh no, that's my outro tune. I can't play my outro tune yet. I'm a big proponent of automating that entire system. First and foremost, they misread melanoma as an answer instead of a question. That got me twisted. Then second of all, that fixed band of the freaking cholesterol level. Anyway, After that, I got me some matcha and some Chipotle, and I cheered up, and I went to the gym. And it was like 85 degrees and sunny here in Laguna, so I can't complain, guys. I'm too blessed to be stressed. I'm doing all this for S words and giggles, guys. I just wanted to give you guys a little flavor of, y'all thought buying businesses and private equity is like getting custom suits, flying across the world, having board meetings, and freaking meeting with owners at Nobu. Y'all thought it was just all that. Y'all thought it's just go to a conference, meet with founders, and write a check for $50 million for a pre-money valuation at $250. Y'all thought it was all that. Y'all thought it was literally just, show up, shred deals, and leave. Wrong. Bros, shorties, there is so much BS that goes into it. It is so annoying. There is, oh my goodness. And I don't know if anybody saw my Instagram story, but apparently I had to submit some documents, and the documents I had to submit to the IRS for this deal had to be signed in wet ink. Now I know that's like a normal thing apparently, but I'm not accepting that. Elon Musk literally ran our government efficiency team for like 6 months. Was that not on his to-do list? To absolutely abolish wet ink. What was he doing for 6 months? This man can send rockets to the moon, but he can't abolish wet ink requirements for government paperwork. Looking at me, what makes you think I have a printer? Let alone, what makes you think I have a pen? I might be stupid for not having all this stuff. I might just be a dodo bird for not having all this stuff. That's on me. That's on me. That's on me. But am I at fault? Am I just not am I not a fully functioning adult for not having a Xerox printer in my freaking house? Guys, I had to drive 35 minutes to the Newport Beach Public Library. I was posted up at the Newport Beach Public Library. I had to pay 75 cents to print out 3 pages of paper just to sign my name and the date. And then I had to pay another 75 cents to scan it and upload it and send it. Something about inefficiencies, it just doesn't make any sense. It's wild work, guys. Anyway, welcome to freaking Wealthy Wednesdays in the Chat Capital Management Firm. Shred Lords and Shred Lordesses, how the heck we doing, y'all? Give me a W in the chat if you had a W day. Everybody spam W. Oh, first and foremost, like the freaking video in the stream. But everybody spam W day in the chat. Put W. I'll put W day first. I'll set the motion. Leaders lead by example. W day. W day. If you had a good day. And quote unquote, and the cheat code is if you woke up today, darn it, you had a great day. You had a great day, twins. Y'all had a great freaking day. If you woke up, you're able to get some food into your belly, whether you cooked it or whether you bought it. You were able to, have a good roof over your head. You know what I'm saying? There's so much going on in the world. A lot of crazy things, a lot of weird things, but more importantly, we got each other. We have the ability to learn, the ability to grow, the ability to have fun in the realm of smart money moves. You know what I'm saying? So it's a W day in my book. Let me do a little roll call real quick and holla at the Shred Lords and see how the heck y'all doing. We got Edwin in the chat. Edwin, what's good, legend? Edwin, I appreciate your promptness every single day. You're an absolute Shred Lord for that. I think low-key, Edwin, you might be in this Friday's upload, I think you might be like the top dude from like the rankings. I think you Garrett, and it's between Garrett, Edwin, Richard, and Adub. I gotta check the stats, but like YouTube ranks the engagement and like and all the stuff for folks that are in the YouTube chat. So I don't know if you guys ever noticed that there's like a leaderboard thing. I don't know, like top. I don't know what this says. I don't know if you guys can see a crown next to your heads, but I can see it. But we do like a weekly thing, and the video is coming out on Friday. We'll showcase who's the top engaged Shred Lord. But Edwin, I think you're up there low key, because I know you pinged a lot about your deal. But catch us up on the deal. How's the deal going, champ? And for everybody else, you got time to catch up too. You can just keep liking and watching our stuff, and you can also just comment and engage on the streams and show up and stuff. It's just it's a fun way to have it gamified, chat. Just a fun way to have it gamified. The easiest way is Shred Lord donations, but y'all have been scared, so our top LP's been dominating that. That's A Boogie. So, but I told him I gotta take his name off because it's just unfair. I'm like, bro, I know what you do. I know how much you make, and it's just like you owe me more money than that anyway. So you better. you better just keep donating. But Garrett, my guy, what's up, legend? How the heck you doing, dude? Mr. 305. I call Garrett Mr. 305. We got Richard in the mix. Richard gets us up. How you been consistent on your posting? And if everybody doesn't know, Richard has a massive, incredible pet grooming business in Texas. And he's absolutely crushing it with his business in Texas. He's doing everything right. He developed this entire content plan. And darn it, he's been consistent. He's been consistent. So I hope, Richard, the posting's been well. Even if you don't get the results of the views and everything you want, just continue to stay consistent and you will see literally the most massive compounding returns you will ever see. So I hope you're staying consistent, man. Hope you're staying consistent. A-Dub, what up, twin? How the heck you doing? A-Dub's one of our top investment analysts at Chat Capital. He's been coming up with some crazy wicked ideas. A-Dub, I'm excited to see what you come up with this week. I followed your recommendation for weekly pitches, and guys, we gotta decide either Fridays or Sundays or Mondays, whatever the day is. Maybe Sundays might be better, but that's when we're gonna have like our dedicated official pitch competitions for what goes into the portfolio. And I'm letting you guys know now. If anybody doesn't know that Chat Capital AUM, that's all Chat Capital's hypothetical educational portfolio. I can't call it a fund legally. But we are we're out here going to be investing and finding good names. And if you look at sort of like what's happening in the markets, and I know Darkest Sunray has been spending a lot of time focused on the markets, but if you guys think of what's happening in the market, there's a lot of dislocation and volatility right now. A lot. And if there are exciting, interesting businesses that we need to be spending time on, there likely is going to be some good names that are mispriced that we can get a good entry point in. If you guys are obsessed with memory, and I'm not going to say memory is a good buy right now, but if you're obsessed with memory, you got these names falling 15, 20% daily, right? While their backlog and bottleneck is growing daily, you know? Memory might be it might be an L, but I'm just saying. It's just worth, you know, taking a look at that and exploring what's going on. Batista, what's good? Batista Bomb in the lab today. What up, twin? I haven't seen you in a minute, cuz. ¿Qué tal, amigo? Are you Spanish, Batista? I think so. I don't want to generalize, but I know you mentioned that you wanted to localize my content into Spanish. I've been working on my Spanish. Pero yo necesito mucho ayuda con mi español. Pero yo tengo un instructor. His name is Richard. Y Richard es mi profesor de español para los streams. You know? ¿Sí o no? Necesito mucho ayuda con mi español. So, if you want to be my part-time Spanish teacher, you can too, Batista. That's such a cool name. You send me an email and stuff on Instagram? No worries, man. I got so much stuff to catch up on. It's crazy. So apologies if I haven't responded to DMs or emails, guys. We are actively closing one of the most annoying deals of all time and actively negotiating life insurance premiums by being one literal cholesterol level off and having a 2.5x hike. So the all the content stuff goes to like that content email, and I haven't even opened up. I think my team checks it, but only checks on it for brand deals and stuff. So we got to catch up on a lot of the other emails. So we'll get back to you ASAP, bro. We just been locked in during the daytime, my man. Richard wishes our healthcare system was better and actually was for people. I thought about that too. Because I saw a video earlier, y'all, and it wasn't relevant to me, but it was just like relevant to just like millennial healthcare decisions globally. But there's a lady that just gave birth in Japan, and she was talking about the cost of like giving birth. I don't know what to call it. Just like cost of birthing, I guess. Like birthing cost? What do people call it? Ladies in the chat, what do they call it? Because it's not pregnancy cost. It's like birthing cost, right? What is that called? It's like when the baby comes out, and then it's like the immediate caregiving, and then it's like the send them home type of thing, whatever that is. It was, we should actually watch it together. Well, no, I don't know. I don't know if there's that many ladies in here, so I don't know if it's relevant to the crew. But essentially in America, it costs like hundreds of thousands of dollars, I heard, or a very high tens of thousands of dollars number. In Japan, in total, it cost her $3,500 for private doctor care for this whole birth giving experience. And Japan gives people stipends per child that's being born of $3,200. So her out of pocket was only $300 to give birth in like a top hospital in Japan. Chat, I'm all about universal smart money moves. If there's anything that I'm literally going to be doing when it comes time for me to, be a Papa Shred Lord, I'm literally moving my family to Japan. Japanese know what they're doing. They know what they're doing out there. But isn't that crazy? Isn't that absurd? Isn't that just like absolutely wild? There's finance baddies in here? Yeah, there's finance baddies everywhere, especially in my chat. They just shy. They should be shy sometimes. But I be seeing them on my Instagram. They be like, oh, Kenny Finance, we see your streams, this, and that. I'm like, all right, shawty. All right. Hey, look, I'm locked in. So I'm off the market. I'm locked in on this bag. You know what I'm saying? But I got some shred lords. I got some shred lords in the chat. I know they single. Do they be talking like it? I'm like, don't be scared. Don't be scared to introduce yourself. I'm like, don't be scared to introduce yourself to the guys. They're all good guys, good values. I keep telling these little finance shawties I'm like, don't be scared. Don't be scared. Some of the shred lords, they're good guys. They're good value men, They work hard. They dream big. They invest. They compound their money in the markets. They not day traders. They diligence. They value-oriented investors. I'm a plug y'all. Who need a girl? I'm a plug y'all. What y'all need? What y'all say? I'm a plug y'all. It's about to be the Kenny Finance matchmaking. About to have e-dates. Check capital. We about to have e-dates. Nah, for real though. What's weird is like, y'all know. Garrett, you are literally a fool. Garrett, you are a fool. Oh my God. But chat, y'all know that women make most of the household financial decisions. You know what I'm saying? Like they're mainly the budgeters and the savers of like households. And that's why it's like, if you guys see like female finance creators, they're huge. They are huge and they crush it. I don't see a lot of them on YouTube, actually. I see a lot on Instagram. Like a crazy amount on Instagram. And their like fanfare and user base is like OD. They've done really well with that. But I love that because it's just like women have so much capital and resources at their disposal, and it's like they need to just have exposure to smart financial decisions. But unfortunately, smart financial institutional wise decisions are often gate kept in like private equity, hedge fund, asset management industries, which are just predominantly male dominated industries. So it's just like natural access to those kind of things are just like tough. So whenever I see women that are from like those institutional finance backgrounds jumping into content and showcasing to other women what smart decisions are, I'm like, W's in the chat for them. They crush it. They absolutely crush it. So I don't know if that many girls out here watching me, but I'm a nice guy. I'm a nice guy. Spreading smart money moves. You know what I'm saying? I just let them know I'm just not emotionally available. I'm locked in on Lumentum's earnings. I'm locked in on Google's earnings. So feel free to join the stream, ladies, but don't think you're about to get any emotional connection out of me in the next 6 months. I'm focused on this cash flowing business, these live streams, and literally the earnings. All right, that's all I'm focused on right now. Holla at me in 2027, shawty. I might be more emotionally unavailable. I might be more emotionally available. Darkest Sunray, your Google's down. What you talking about, bro? You see after hours? After hours moment? It's like flat. It had like crazy wicked volatile movement. So we're talking about that later today though. We're talking about that later today. We got like a whole agenda that we're talking about today. Where's ADub at? ADub had a W day. ADub is ADub has coverage. And for guys, if you don't know, like if you pitch a stock and it's successful and it goes into our portfolio, you own coverage of that asset in that space. So we go to you as like the go-to expert to give us all the updates and everything, you know? So ADub pitched a few stocks and some got allocated to the portfolio. So W ADub. But what was I saying? ADub's one of his earnings got released today. So he pitched Modine Manufacturing. And if folks don't know that, they do some of the thermal cooling for data centers, EVs, and I forget their segment, but they crushed it today. And their earnings report came out today, but their call is tomorrow. Correct me if I'm wrong, ADub. So ADub, if you got time, man, do a little recap for that. Post it in the Discord. Hey, y'all all in the Discord? Who in the Discord? Who ain't in the Discord? Raise your hand if you're not in the Discord. All right. We got to get you all situated in Discord. But ADub, once your post earnings call, and I can show you a prompt. Or you seen the prompts that I do to have AI and stuff summarize like the earnings report and the Q&A, which is one of the most important parts of the earnings conversation. But send us just a little recap real quick of like what happened with Modine Manufacturing, and that'll be a W setup. Post it in the Discord and keep all the homies up to date on that name. Y'all thought we just gonna have to be day trading stocks all day. Nah, I'm literally treating this thing like a hedge fund. I got friends that work at Tiger Global, Co2, some of the best hedge funds in the entire world. I know exactly what their day-to-day is like. And we're replicating that exact process here. We're replicating that exact process with Jack Capital. This ain't no sweatshop, day trading shop, man. You ain't hopping on those sales calls here, man, selling penny stocks. We treating this ship like a tiger cub. You know what I'm saying? We treating this ship like a tiger cub. Garrett, yeah, I look at all my dashboards. I'm a data-driven dog. Oh, Batista, you're Argentinian? Are there any cash flowing businesses in Argentina? Anything I should look at? I'm doing a South America tour of just like main channel, like big videos. And if there's like really exciting businesses that I should see when I'm in South America, I didn't plan to go to Argentina, but I could think about it now. If there's like really big industries, I should say. So let me know there. Oh, you're right. Okay, Garrett, you're right. It's called labor and delivery. I'm so dumb. Boring businesses over day traders. Just catching up on y'all in chat. She broke my heart literally 2 weeks ago, and I'm healing. Let me tell you, on that, Richard, that stuff's natural, man. If it wasn't meant to be, you saved yourself a lifetime of headache, man. You know, I'm under the belief that there's there might not be the one, but I think there's a good natural fit for the soul out there for people, especially guys. Like, if you just keep your head down, focus on you, don't use that heartbreak as an excuse to be a butthead, to be a womanizer, to disrespect your body, not go to the gym, eat like crap, and fall into a vicious cycle like that. Think of it as a blessing, bro. Like, you unlocked more time, energy, resources, emotional capacity, and headspace to reinvest back into you. You know what I'm saying? So, like, I know some of y'all are single, some of y'all in relationships, some of y'all went through heartbreak, some of y'all just never seen a girl. But it's like, if you have that season of singleness, bro, it's just like take advantage of that. Like, the worst thing you can do if you're like an ambitious builder, like if you got that dog in you, is to waste your days when you're independent obsessing over a partner. Like, I just don't, especially dudes. It's just like, I just don't get that. Like, some guys are obsessed with just like female attention. And it's just like, they got all this time on their hands. They're talking about girls. They're trying to go on 17 Hinge dates. They're like hanging out with their friends, complaining over wine because they haven't found a partner. Bro, lock in. Wake up, pray, go to the gym, go to work on your thing, 16 hours straight till you get a milli, till you get a billy, or till you prove to yourself that, like, you're who you think you could truly be. You know what I'm saying? Like, take advantage of this single of singleness, right? Or season of singleness. You know what I'm saying? Like, make it so blatantly obvious that you are like a dog at life in all respects. Your headspace is good, your money's good, your focus is right, your spirit is right, your body's good. You know what I'm saying? Like, don't go into a relationship lacking something. Don't go into a relationship trying to fill a void in that a partner would hopefully fill. You know? So many people are just like so depleted because they lack prioritization of their own time and resources that they try to enter a relationship literally begging for someone else to fill that void. Nah, that's dumb. That's terrible. Right? Become literally the greatest version of yourself. So you can meet someone that literally did the exact same thing. And then you continue to exponentially grow together. Not trying to piece each other back up. Hey, I'm out here dropping bars. I'm supposed to be talking about Google's earnings, and I'm giving y'all absolute life advice like crazy bars. That's some real work. I thought about that on the fly too, by the way. I didn't plan that. I thought about that on the fly. That came from the hard chat. Darkest somewhere said, hair and nails are like 100 something a month. I feel guilty buying a pair of shoes. That's wild work. I'm telling you right now, I'm telling you right now, if any girl comes to me and she's like, if we're just like hanging out, getting to know each other, if she sends me a Cash App request for hair and nails before she sends me Bible verses, or before she sends me resources for what I'm working on, blocked forever. And one thing that I'm proud of myself that I do this now, but I'm definitely not afraid to do anymore, is and disclaimer, Kenny's a Christian. Disclaimer, Kenny Finance loves Jesus. All right. That's my guy. Right. But I am so quick to pray a very simple prayer of, God, if this person is not meant for me, please remove them from my life expeditiously. You know what I'm saying? I pray that and it's gone. It's so good. And whoever sticks around into the second phase of diligence. You know what I'm saying? So it's just like, you know, if a girl is out here before she does anything to support my spirit or my grind is asking to extract, she's got to go immediately. And just like, I don't want to see you ever. Wish you well. You know what I'm saying? So y'all gotta lock in, all right? Because I'm, and look, this goes for girls too. This goes for girls too. If a guy is not praying for you, giving you resources and ideas of how to live a better, healthier lifestyle, or supporting anything that you got your mind focused on, that guy is detracting value. Get rid of him. He's a bum. And I'm quick to say it. All right? So shorties, use that as your criteria. Is he feeding my spirit, helping me live a healthier lifestyle, or supporting my goals? If the dude's not doing that, shorty, that's a bum. Some men literally out here be trying to get with shorties to save on rent. And that's whack as F word. And I stand on that. Y'all call Kenny Finance in a deep bag today. Shoot. It's all because of this life insurance scam. That's why it's got me all cut up today. Anyway, Cool Wavy, what up, twin? How the heck you doing, Shred Lord? We got the Palm Beach Prince in the mix. Palm Beach Prince. A-Dubs out here talking about Argentinian ADRs. We gonna look into that. And then SK's in the mix. What up, SK? What do you guys think of screaming room business? What the heck is that, bro? A screaming room business? What's a screaming room business? Screaming room. Guys, have you ever heard of that? A screaming room business. What is that? And we got so many Florida folks. We got them Florida folks in the chat, man. We got them boys from Florida out here in the chat, man. Gary, what you talk about flying a woman out? Why we gotta fly them out? Why we can't procure locally? I thought about that though, y'all. I thought about it. Like, what if my like woman's not in America? Like, what if my wife is in like, I don't know, some international country? You know what I'm saying? Like, what if they out there? Do I gotta like fly them out? We live in a connected world. We can do that. People back in the day used to get married off of writing letters while people went to war. Saw them like 5 times in their whole lifetime. Surely I could date a girl on FaceTime. Darkest Sun Ray, what do you talk about? It's hard when you're young. It ain't that hard when you're young, man. If you're a young bull out here, do one simple thing. Focus on making the decisions and the investments that are going to help you live an incredible 100-year run. Like, if you're young, bro, you should strive to compound in everything that you do. You should strive to have the most sound daily deposits in everything that you do. When it comes to your intelligence, reading daily. When it comes to your investing, studying a business daily. Not trading, studying a business daily. When it comes to your health, disciplining yourself to eat healthy daily. Going to the gym or moving your body daily. When it comes to your riz, challenging yourself to have solid, good, non-transaction oriented conversations with strangers. So many different ways. Like when you're young, don't sit there and be one of them young bulls that are literally just obsessed with talking to girls all the time, chasing girls all the time. That's what most men are doing out here, right? Like focus on the ball game of compounding efforts. Y'all gotta get hip. I gotta get y'all hip. You ever seen this anime? Y'all ever seen this anime? Chat, y'all know I like anime. But y'all ever seen this? My boy Boogie put me on this. You ever seen this here? Solo Leveling? Anybody saw this? Put in the chat if you saw this. Say yes if you saw it. Y'all ever saw this? This is an elite anime that you need to watch. It is an elite anime you guys gotta watch. This guy, Sung Jin Woo, turned his life into an upgrading video game. Every day he woke up, he had daily deposits, he had a sense of focus, he had a mission, and he was getting to it. And everything. His mental, his focus, his fitness, his skill sets, his agility, all of that. Like, why can't you have that kind of like mindset? You know? Like, I think people take life too seriously that they forget that you could just literally make life a video game and wake up every day to stack XP. That's what I do. That's literally what I do. Like, wake up every day and stack XP. Cool, Webby. Most boxes are bad investments. What y'all talking about boxes? Am I missing something? Y'all here talking about boxes? Cool, Webby. What was that about? We're talking about a doc. We're talking about a box. Oh, we got A Boogie in the mix. What up, Chin? What up? What up, twin? Hey, y'all. Hey, y'all. I ain't gonna hold you up. Me and Boogie, we should have did it on stream. Me and Boogie, we played Marvel Rivals last night. He put me on game. He was teaching me how to play Marvel Rivals. I'm so bad at that game. But I was getting my movement back. Chad, I'm low-key a gamer now. I'm low-key a gamer. What's going on? Nothing much, man. People out here trying to delay my deal. I'm out here trying to do right by the people. Practice what I preach. But every day's a W for me, man. Every day above ground is a good day, bro. Thank you for asking, man. Thank you for asking. Friedlichberg? Friedlichberg? How do I pronounce your name? Can I say FB? My boy FB. Or Facebook? Nah, FB. F-Berg. Can I call you F-Berg? Friedaberg. You gotta give me a nickname. Give me a nickname. Give me a nickname. Give me a nickname. You were in Netherlands the past week? What the heck? There's a cycle cleaning vending machine. Wait, cycle cleaning vending machine. How does that even work? What is that? Cycle cleaning vending machine. Let me look that up. A cycle cleaning vending machine. Oh, it's like a bike thing. Ooh, hold on. Was it something like this? What was it? F-Berg? Oh, like this maybe? That's interesting. Like a bike mini cleaning station? Or like this? I know they have like in Europe they have like those like bike dispensing stations. Like they have like all these underground in Europe they have all these underground things. Oh, this it? Oh, wow. That's genius. And the infrastructure cost is like quite minimal, probably. This only probably it sounds like or costs like $1,000. And you can probably get like so many things a day. Dude, you should roll these up. Or you should like find the vendor of it and just roll out a bunch of these. If you're in Europe, F-Berg, go to places like Copenhagen. Crazy motion for the bicycle boys and girls. Crazy motion. You know what I'm saying? Garrett wants to find an Eastern European honeypot. Until you do something wrong, she cuts you out and freaking blow your kneecaps out. Can't mess around with them Eastern European, girl. You can't get away with nothing. Well, you better be locked. Don't play that. They fight like Khabib. He says, unless a shorty owns $1 billion empire, I don't want it. That's the truth for it, bro. Make your own $1 billion empire. They can be like, OMG, is that the Garrett? OMG, is that the Garrett from Chat Capital? No way. Can't be him, huh? You're dating Garrett from Chat Capital? Are you serious? That's what all these girls about to be saying about y'all. Are you actually dating Richard? The pet grooming extraordinaire from Chat Capital? OMG. That's crazy. All right, who said they own some Google? Darkest Sunray? You own some Google? And oh wait, AW, you said you posted it? On the Discord? Whoever, if you're not on Discord, say I, and I'll give you the Discord link. But in the Discord, AW, did you post the write-up? I haven't checked Discord today. I did it earlier, but I'm a little late on Discord. I got some beats playing. Yeah, you guys want to hear my tunes? We're gonna turn this like a cafecito. Yeah. Hey, chat, capital. Hey. All right. We have to talk about a handful of things, chat. All right? Because this is my cafecito song to get locked in. All right? And the first thing we're going to talk about, we did our catch up. We did our roll call. First thing we're going to talk about is Modine earnings. Then we're going to talk about Google's earnings. And I'm going to give you a preview of tomorrow's or this weekend's like banger segment. Right? It's gonna be a fun one, so make sure you guys don't miss it tomorrow. I want to increase the spacing on this joint. Hold on, I'm trying to. My format and all messed up. There we go. Because chat told me I had to get more organized in the mix. I was like, bet. But if y'all want to know what we doing, ta-da! For 2-4, this is what we doing, chat. Rich topic in the mix. What the heck is up, Top Dog Shred Lord? How you doing, dude? We did our roll call, Top Dog life advice call. Now we're gonna touch a little bit on Modine's earnings. I'm gonna do my independent point of view, and I'm gonna have my Gemini analyst give its thoughts and recap. And it's important we do this because we do have exposure into this business now. Like, we are part owners of Modine Manufacturing. We got to talk about, I didn't even spell contest right. I'm such a terrible analyst. Google. We're going to talk about Google's earnings. And then we're going to dive into tomorrow's contest. But we do have, wait. Roll call. I like to call this roll call and ideas. Right? Let's do it like this. Roll call and ideas. And every day I'm going to update this of what we're going to talk about so that you guys aren't just sitting in limbo like, oh, why is Kenny yapping about relationship advice? And he can't even talk to girls. All he knows is how to speak about earnings and unlevered free cash flow. Anywho, just kidding. I got Riz. I think out of all my friends, I'm probably the most smooth with girls. I think so. You know, I think I'm also the most handsome. But you know, some other people have other opinions. But what was I gonna say? So we're gonna do a roll call and ideas. I don't know if you guys have that many ideas real quick, but I know we have an Argentinian idea. Wait, hold on. Batista, you might have some insight on this, but BBVXF, you ever heard of that? So we gotta look at this Argentinian idea. And then we're gonna I want to look at Comcast. So I know it's not a pitch, Darkest Sunray, but you said that you're looking at like the Comcast play. And Boogie, shut up. Mods, ban him. Mods, ban Boogie. And so I want to look at Comcast, and I want to look at Cat to the watch list. Oh, Caterpillar. Did we added Caterpillar already? Didn't we? I think so. But Caterpillar, Comcast, and then the Argentinian ADR, and then we're gonna do a quick okay, wow. MTRN, we're gonna add those two. And then we can do mod earnings, Google earnings. Google's earnings gonna be our main segment. And then I'm gonna give you guys like a 5-second Well, yeah, I'll tell you guys now. So tomorrow's contest. Wait, is tomorrow Friday? I think it's Friday's contest. Okay, never mind. It's Friday's contest. It's not tomorrow. I'm tripping, twin. Fridays. Yeah. Friday's contest. That's what it is. Friday's contest is that we are going to try our best to find the best businesses under $1 stock price. It sounds like a crazy, impossible task. We are going to be looking amidst the penny stocks just to see if there is literally anything worthwhile. My estimate and guess is that there's nothing worthwhile under $1. That is my assumption. But we are going to challenge ourselves to try to find at least one undervalued, cash flowing, profitable business with a strong moat that is either overlooked or under the radar. Now it's going to be really fun. That's going to be really fun. So that's the Friday's contest. So I'm going to give you guys a 48-hour head start to look. But whoever finds it and picks it and pitches it gets to go into the portfolio, and you'll get a pat on the back for that. But that is, yeah, it's risky. It's risky, but it's not for, we're not trying to put the house on it. You know what I'm saying? We're not trying to put the house on it, chat. It's designed for us to, one, learn truly the quality of these like penny stocks, as well as that we can like truly understand how crafty some of these things are. Like there is here's the impact. You all are very educated when it comes to investing. Why? Because you're here. This is where all the top dogs show up, right? You all are very educated in the world of like smart, sound investing, I think, or at least you're getting there, right? There's 7 billion people out there that think that penny stocks are attractive. There's a lot of uninformed investors out there. So we got to do the research. We got to do the work for the rest of the world to showcase that, one, penny stocks are pennies for a reason. And two, it is literally finding the most pristine needle in a $1 billion haystack or billion bin haystack, right? So it'll be a cool experience just to like see what we can actually come up with. Because even though we might think something is cool, I'm sure when we recap it and do a quick little diligence on it, we're going to find things that just like drastically spoil our appetite on that thesis. And then I'll also show you like the broader quality of these businesses, what could be happening to regular small caps that could eventually end up in the penny stock lane. So it's gonna be a funny segment to see like what penny stocks we can find. So as you come across some, I'm not saying spend your whole life trying to find it before Friday, but if anybody is like chilling or looking at stocks, see if you can find one and save it and put it in the Discord. And Friday we're gonna spend some time talking about that. Airtime International. Something came across my desk, Garrett. A massive, incredible business with crazy upside potential, limited downside. Airtime International. It'll be funny if we find one that's actually a scam too. That'd be fun. Special reward for anybody that actually finds a penny stock that's actually a scam. So that'll be good. You like how the tape feels on Cat? You like Caterpillar? All right. I rotate in and out of it. It's good. Why do you keep rotating in and out? Why don't you just sit and hold it for a very long term? Darkest Sunray. That's sometimes the best thing you can do is literally just hold it for an extremely long term for the deep long run, you know? Because when you get in and out, like if the tax implications on that can be annoying, you know what I'm saying? Black Mama, thank you for subbing to the channel. Welcome to the team. Top Dog Shred Lord. W Kobe. Yeah, cool Webby, it is very risky. It's the point, to show the world how risky it is. You know? Us going through is gonna save a lot of lives, a lot of folks some time and money. Black Mamba Trader. Top Dog in the mix. All right, chat. So, step one, we got to figure out F-Berg how to find this business. F-Berg, if you know anybody that is selling this, let them know that we are buyers. The only issue is it's not a U.S. It doesn't have a role in the U.S. yet. And F-Berg was in Norway last week, and he found a like a bike cleaning vending business. Crazy dope play. Good margins. And people use bikes more than they use cars out there in Europe. So this is attractive business. But let's have a conversation with not Modine, Modine Manufacturing. Does everybody know what Modine Manufacturing is? Modine Manufacturing. Whoa. How y'all undergoing maintenance right now? You just released earnings. You hiding something? Oh, snap. A-Dub, is this a scam? Nah, I'm joking. Let's do investor relations. Yeah. Let's go here. All right. So if you guys don't know what oh wow, you cannot see that. That stuff is so small. Hopefully that's easy to read. But Modine Manufacturing is focused on providing the thermal cooling solutions for data centers, AI servers, and electric vehicles. Right? Garrett, I got you. Every time I see something on the screen, I'm like, Garrett's blind as a bat, so let me zoom in as much as I can. Yeah, Darkest Sunray is the taxes are nuts. I don't know if you live in a high tax state, but if you don't live in a high tax state, you're like okay, but you're just still giving away crazy gains for nothing. But if you're in like a high tax state, it's just like you're you know, it's a tough setup. You know what I mean? So all right, Modine Manufacturing, the thermal management play for AI. How the heck y'all doing? And the story is very simple. That's my Marvel Rivals controller. The story is very simple. If you have the thesis that AI is going to take off, and there's going to be a lot of need, like a huge need for data centers and AI servers and infrastructure around that, these things are going to get really hot. And the worst thing that can happen is you have all of this data center infrastructure and it overheats. The key is data centers essentially power the web, right? You guys know what a data center looks like? I think most of you do, but if you don't know what a data center looks like take a look at this. Like this is what a data center looks like. And these things are running 24/7. You ever tried keeping your TV or your Xbox on for 24/7? That stuff gets hot, like really freaking hot. So it's mission critical that you do whatever you can to keep it moderately cool. And you're in like, you can't have any downtime, because if you do have like server or site downtime because it overheats or there's like something bad that happens, that's literally just like an electric grid going out. A huge server's down. Netflix doesn't work. Twitter, you can't log in. People can't log into their mobile banking things to pay their bills. Like, it's just like we are starting to become as a society a little bit over reliant on data centers. But it's just like it's mission critical that as we put more stacks, more electricity, more servers with more throughput, more interconnects, it's just like things get hot in the kitchen, right? So there's a bunch of other ways to like cool it. You can do traditional air conditioning. You can do liquid cooling. You can do like other thermal solutions. But this business, Modine, focuses on like the thermal liquid cooling side of the play. And I think it's like an attractive, I think it's an attractive place to play. And they just released earnings today. So here's the recap. Net sales of $805 million increased by $188 million, or 31% year over year for third quarter. They successfully terminated a pension plan. Oh, that's crazy work. They got rid of people's pensions and then paid them out. That's wild work. Net loss of $46.8 million, including the non-cash pension termination. It's like a weird thing. Why are they doing this? Adjusted EBITDA of $120 million, increased by 37% growth. Adjusted earnings, for that? Okay. Increased fiscal year outlook. Net sales growth between 20 and 25%. All right, that's solid. Adjusted EBITDA range of 455 million to 475 million, resulting in a 16 to 21% growth. And this, like, earnings are really important because it gives you a recap of what happened in the last quarter and sometimes the last year. That's the first piece of critical insight. The second is it also gives outlook on what they expect to happen either the next quarter or the next year. And analysts that are investment research analysts at these banks, as well as investors at hedge funds, they all have kind of like a consensus around what performance will be and what guidance will be. And the street is always trying to see if the performance and the guidance are above, at, or below the street. All right, that's earnings 101 for folks that haven't ever, been in the earnings game. It's very transactional. All right, that's why a lot of folks are like, why would you want to be a public market CEO? You're literally chasing quarterly numbers. Versus if you're a private business, you can like focus on the extreme long term and invest in what's right for your business. Green money momentum. What's up, Shred Lord? How the heck you doing? I hope you're having a fantastic day. Happy Wealthy Wednesdays. Markets are so devastated, they gotta bounce sometime soon. They gotta bounce sometime soon. Yeah. Yeah, markets are pooping the bed right now a little bit. But I think it's healthy. It's kind of intuitive. Like I have dollars at work in the market, but I think it's healthy. I think there's been a lot of uptick in prices and stuff. And uptick in prices and stuff off of just like speculation and noise and like not enough real fundamentals and results. And a lot of names have just ran up to incredible, crazy valuations. And it's, I'll let it simmer down a bit. It's all right. Creates more buying opportunities. You know what they say? Be fearful when others are greedy, and greedy when others are fearful. And the best investors in the entire world, they're not chasing quarterly numbers. We're looking at the earnings reports because we're going to get smarter on these assets. We don't know anything about Modine yet. So it's important that we like read up on the quarterly stuff to see like what's the narrative and like what's happening. But longer term, it's just like you gotta fundamentally understand like the niche nuances and KPIs of like the industry and the business, So, all right, this is what they got, and they're having their call tomorrow. And somewhere in the Discord, let me pull up the Discord. Somewhere in the Discord. If you guys aren't in the Discord, join the Discord. We got none but shredlers in here making smart money moves. But oh, okay. Thank you so much. You wrote it up. I'll pull this up. I'll pull this up after my thoughts. And then Modine delivered another quarter of outstanding performance with 21% organic sales growth, driven by a 78% increase. Whoa! This is insane. A 78% increase in data center sales. That's all AI. Isn't that insane? That you're seeing like this crazy uptick in cooling solutions for AI-enabled data centers, or like data centers that are also serving the AI industry. That's an insane amount of just like quarterly sales growth. Like you're starting to see the same narrative that other stocks are having. Memory, they're no longer selling to consumer. They're pivoting their entire sales model to sell to enterprise data centers and AI, right? When it comes to like Lumentum and the optics, they're no longer selling their interconnects to like other like non-AI oriented customer segments. They're doubling down on the enterprise AI and data centers, right? Like everyone's like over indexing their entire business model and production to cater to the data center and AI CapEx boom. And it's mission critical. It's important, right? That's why like I was paying attention to Google's earnings, because Google is one of the hyperscalers. There's Google, Microsoft, Meta, and big folks like that. And they are the tip of the iceberg, right? They are the key AI demand layer. And if they are indicating that they're doing more CapEx for data center build out
and semi-supply chain investment. That then means that all these other players, the memory folks, the EUV lithography systems, the thermal cooling ones, the optics interconnects, all those are likely to benefit from increased CapEx spend. But here's the trick, boys and girls. The second that CapEx guidance is likely to like reverse or go down incredibly, boop, that's when you're going to start seeing things poop the bag, you know? So that's just like the most basic, explanation of what's happening out there and how these businesses are pivoting their business model to it. But all right, the capacity expansion for data center products remains on schedule, with new production lines contributing to 31% sequential increase in sales compared to the. All right, margins in the climate solutions. Oh, I forgot they did climate solutions. They also do like renewables, like solar and stuff. Improved sequentially this quarter. Remain confident that we are on pace for a strong fourth quarter as more production lines are commissioned to keep pace with stronger demand. Last week, we made an important and historic announcement regarding the pending spinoff and combination of our performance technologies business with Gentherm. I don't know what that is. This marks a major milestone in our strategic transformation, including a significant acceleration of our strategy to evolve our portfolio to drive long-term value for our shareholders, customers, and employees. The combination of performance technologies with Gentherm will create a scaled leader in thermal management solutions. While Modyne will become a pure play company solutions. Whoa. The combination will do this while Modyne will become a pure play climate solutions company focused on the high growth data center and HVAC and refrigeration markets. Okay. $805 million in sales in one quarter, up 31%. The growth was driven by climate solutions, strong demand from data centers, and sales from acquired businesses. This is important to unpack. Is right now it's largely organic growth, but what is important to unpack when you see things like this, revenue growth from one segment, this customer segment, and this, that means that like there's a combination of organic and inorganic growth. You feel me, chat? And what you don't want to see is a business that is overexposed to their growth story coming from acquired growth or inorganic growth, because then it's like they need to have really high capital spend to acquire these businesses. And what is their ability to acquire these businesses at attractive multiples with limited competition and integrate them and actually execute on growth, right? Especially if they don't have a track record of doing so. So now the question is, are they tapping out over why is it that if the data center revenue is growing so darn fast that they need to spend any time and resources and capacity thinking about acquiring other businesses? That could mean that there's just a deal that was too good to pass up on. That often happens. Or two, some of the other customer segments outside of the data center ones have lackluster growth and they need to acquire in those other segments to compete. Or three, they're just planning for the inevitable that the data center thesis has a natural end to it, which it does, and they want to just have a diversified end market once things start to slow down. That's my preliminary thought. But like, it's this acquired business is not a bad thing. I just want to see if they're doing it right. Right? Like if this was like a private company, I would ask for the target acquisition multiple and that specific target company's growth rates for every single add-on that they've done to see their ability to like actually acquire accretive growing businesses. Ooh, we diving in, chat. We cooking. Y'all thought we was talking about relationship advice. Nah, we cooking in the mix, chat. All right. So performance technology sales increased 1% from the prior year. See, that confirms my thesis. Their other businesses outside of this suck, so they need to acquire. Gross margins decreased primarily because of the data center segment, and then higher temporary costs related to capacity expansion for data center products. What that means is they are increasing the spend on products and teams that are dedicated towards serving the data center segment. And then
That's about it. SG&A, that's not really relevant. Operating income increased 30 million to 90 million. Restructuring costs. Company also recorded a non-cash pension termination charge related to the U.S. pension plan, restructuring, All right. Loss per share was this. Adjusted earnings was this. They have a funky bottom line. The company, I think, actually on the surface is burning money. But all these adjustments and stuff are showing positive EBITDA. All right. All right. Third quarter segment review. Of course, the climate solutions one, which includes data centers, is crushing it. Okay, it's literally recapping everything we just read. Literally recapping everything that we read. Here we go. Why was the other performance technology one only up 1%? So there was higher sales to automotive customers. I think this might be the EV. I think this is the EV segment. I think their EV segment is slowing down. Partially offset by lower sales to stationary power and commercial vehicle customers. Okay. Yeah, I think the EV sales segment sucks. The segment reported gross margins, this, and this. Net cash. All right. Free cash flow for 9 months was negative. They're burning cash. Not a bad thing. Like they're just trying to do whatever they can to cater to the data center segment. All right. Cash payments for restructuring. Total debt. Oh. They have a pretty OD debt. I don't know if you looked at this ADUP, but they have a pretty OD like capital stack. Like they have a lot of debt on the balance sheet, bro. Like a lot of their net debt is around 500 million, but their adjusted EBITDA, I don't know what it was annually for like the full year. But I think they might be sitting at a pretty high net debt to EBITDA for this kind of business. Based on our strong performance this quarter and continued momentum with our climate solutions segment, we're going to start rearranging our outlook for revenue and EBITDA. All right. This confidence anchored by data centers. That's what you're going to see in all these earnings reports. Data centers, AI demand, unprecedented AI demand. Boom, boom, boom. Data centers. They're all going to say the same stuff. Given the strong demand from our products, coupled ability, boom, boom, boom. We are raising our multi-year outlook for data centers to 50 to 70% annual growth for the next 2 years, putting us solidly ahead of our $2 billion target for fiscal year 2028. That's weird. They say they put 2-year targets. Good luck. All right. And then the call is going to be at 11 a.m. Eastern time. I'm going to listen to that. You don't have to listen to it live. We're not that big of shareholders where we got to like ruin your day. Just as long as we get the transcript of the Q&A, we can talk about it. What y'all think about Mo9, huh? What y'all think about Mo9? Should we keep it or sell it? Well, we're not going to vote on that because we literally just bought it. We literally just bought it yesterday or 2 days ago, you know? And let's see what the stock is at. Let's see what the stock is. Oh, whoa, that's not it. Well, I was like, what? But the business virtually flat today, post earnings, and slightly up. I think it had a huge uptick here. It increased 5% post earnings. None of these news articles are actually relevant. Just go to the source. They all just recap the exact same thing what we just did. Let's go to ADUB's write-up. This is what ADUB said. It's gonna be hard to read, but I'll just I'll summarize it for you because you can't zoom in on Discord, I don't think. Or here, I'll copy and paste it and put it in here. This is what ADUB wrote for us. ADUB says. All right. I'm like ADUB's analyst. All right. This is what our good sir Can y'all read that? I'll make it bigger. All right. Key takeaways. Earnings per share, revenue growth, performance, same thing. Despite rapid expansion, gross margins and climaxing were impacted by temporary planned costs. Okay. Bet. Good. Good little recap, bro. Good recap. Let me show you what I would do for not worth my portfolio. Why not? We like our Modine. Let me go to my research. Research. Here we go. Okay. All right. So we're doing this. Go here. Here's like my prompt. Darkest, tell me why you don't like it. You got to keep your data centers cool. If you out there using ChatGPT, and then we do this. All right. I tell it. I like you to act as if you are the head of cooling investments, like super niche, at Tiger Cub style long short equity fund. You know everything about there is to know about the niche business models, competitive moats, and industry tailwinds and headwinds of the sector. And more importantly, you have an eye for pattern recognition across similar businesses, their historical earnings, transcripts, patterns across them all. And I'd like to produce an earnings recap memo to help me understand what is happening with Modine Manufacturing, Mod, right? As well as what across the corner for the name of the sector. This should be an elite level diligence and depth, not surface level variation of the results. Hit me with your best shot, Gemini. Lock in, Shredlord. Lock in, Gemini. All right? Give it to me. I got the best AI in the game, y'all. Hedge fund analysts are so chalk. All right. Yo, what y'all have for dinner today? I had Chipotle before I came here. Came here as if I went to the office. I had Chipotle before I sparked up stream. I only had half of it. Can you guys finish Chipotle in one sitting? I can't. I gotta get my weight up though. I hit the gym. Got some good gains in. All right, lock in. All right. Good beat and raise, confirming that a strategic partner to Pele Carbon Solutions for the data center AI build out. We need something like this. This was also driven by overwhelming demand for its thermal management solutions, particularly. Yeah, did it have a lot of debt? Where do you see that? Oh, okay. You don't like the capital stack? All right, fine. Hey, look, it's all good. It's nah. That's the point of the chat capital. Every idea is welcome, as long as you don't put it in a mean, harshful, disrespectful way. But no, that is you put it in a good way. And guys, we should never be like in chat capital. We should never be always agreeing with each other. I think like the healthiest investment decisions comes from having a committee and discussion that is all tailored towards helping you arrive at the right answer for an asset by helping you pinpoint the questions that you didn't have when you originally thought about the thesis. Like having the opposing and diverse views creates a better investment outcome because it helps you think about the questions you didn't truly surface in your original underwriting. Right? Especially if we all have different expertise and perspectives on a theme, you know? So everyone is always welcome to come in with opposing views. You can literally say, Kenny, I think Modine is a terrible business because of X, Y, and Z. Or you can say Kenny Lumentum is a really bad business because it doesn't really compete as well as it should against Coherent or things like that. or you're like, oh, I think people are overplaying this entire AI theme entirely, I don't think Chat Capital should be over-indexed into tech and AI. I think we need to be looking at healthcare or financial services or like anything like that. All ideas, respectfully, are welcome. And with that, let's see what Gemini has to say. If you want me to, AW, if you want this prompt, I can put it in the Discord of like the prompt of how I use. But it does a really good job of like scraping the data, because it's not just about reiterating the results. Like you can get a text alert for that. It's about like piecing together the patterns of former results and competitors' results and forward-looking statements, and triangulating that with supply chain capacity and availability. That's what's like a killer, like a really good important sort of like right up there. But like this one is okay, but I needed to go deeper. So the key updates, earnings crush. This is literally exactly what ADEP said. The pending spinoff of the less sexy performance technology segment will leave Mode9 as a pure play high growth data center HVAC specialist. Okay. The bullish narrative, deep dive on the customer dynamics and Mode. The core investment thesis for Mode9 is simple. AI requires immense power, and immense power generates immense heat. My theses be spot on, y'all. AI be copying me. Mode9 provides the critical infrastructure to manage that heat. The acute demand signal and capacity bottleneck. The key insight from the earnings commentary. Oh, they're lying. We didn't even have the commentary. Management has stated that demand. Okay, see, this is now starting to mess up. Like, where's AI getting this information? The call didn't even happen. I think it's piecing it from last call. This pattern is in super cycles. The immediate focus isn't margin optimization. It's getting capacity online to meet customer orders. Phase 1 is capacity. Phase 2, oh, it says the previous call. All right, it's good. It's good. Mode9 has hired 1,200 employees recently to support the ramp up, incurring some temporary margin pressures in Q3 that are expected to be above scale volume scale in 24. All right. Customer specific growth. Data from the call points to staggering projected growth. 3 billion data center target in 2028 from a base of 60. Okay. 57 annual growth. Securing wins with hyperscalers like Google. They serve Google, who are actively diversifying their vendor base for thermal management. Integrated thermal expertise. Isn't just one product, but solutions, air-based, hybrid, and liquid cooling. Cool. Liquid cooling leadership. NAPS technology, TMG Core, and Scott Springfield have been prescient, providing immediate intellectual property in advancing liquid cooling. Okay. My biggest question is like, I wonder what the true demand is on, I wonder what the real demand is on this liquid cooling stuff. Like, I wonder if there's like alternatives that are more enticing instead of liquid cooling. Like, I wonder what the other alternatives are. Because there's probably like a lot of folks that are out there doing something different that could be more cost beneficial for some of these hyperscalers. Because what I see happening right now is, since they are now all just building the data centers out right now at massive scales, what I see happening is I can easily see them testing out different technologies across different sites and doing some beta testing to see what is the cost profile, runtime, and effectiveness in terms of like the cooling stats across 3 to 5 different data center sites and pilots. And they may put liquid cooling in one, traditional air cooling in the other, and then, I don't know, a third innovative variation in the other. And at the end of like a 12, 24 month pilot, they might be like, all right, this one performed better and was less expensive. So we're gonna go with that and roll it across our entire fleet. So while they say that they're signing customers like Google and all that, you gotta really dive deeper and under the hood to see, like, are they doing large, full scale out implementations, or is it like pilot wins? You know? Because Google literally could have just gave them $100 to say, like, let me just try out one of these for 5 minutes. And then they want to put them as a logo on their deck and all that. So be careful with that, y'all. I'm not saying they're doing this, but just gotta be careful with it. Geographic expansion. All right, so their supply chain is in India, and they're trying to expand into the US. And then here are their competitors.
So Vertiv is arguably further along in its pure play journey and trades at a premium valuation. Vertiv has been quicker to market with some high density solutions, but the market is massive enough for several winners. Modyne is winning the business because customers need vendor diversification. So now the key is there actual product differentiation across them and Vertiv? I think Vertiv is bigger, to be honest. Yeah, I think Vertiv is bigger. $70 billion. And then Modyne, 10. So Vertiv probably has like all of the bigger customers. So they probably have all like the way bigger customers, chat. Anybody a big fan of Vertiv? I know we heard Vertiv before. I'm just unsure if folks are just like crazy gung-ho about it, you know? Unsure if folks are crazy crazy excited about it. You feel me, chatsters? Y'all feel me? All right, hold on. Let's get back to... Y'all like Vertiv? Vertiv. If y'all had to pick Vertiv or... Hold on. We're going to vote in the poll. It's going to be a quick little 1-minute poll. Which cooling stock? Vertiv, they're larger, or Modyne? All right. Which one would you guys pick? Vote in the YouTube poll. Would you do Vertiv or Modyne? I'd be curious to hear what folks are thinking about for that. I honestly, if it were me, I would pick Vertiv just because it's a scaled player and they're going to benefit from the overall like cooling demand need and everything like everybody else. But I wouldn't go too crazy like for Vertiv. I wouldn't go too crazy on a cooling thesis to go with experimental, like super small ones. Vertiv is like, in order to win this stuff for data centers and hyperscalers, like they want folks that are scaled and that provides consistent supply of their products. And I think Vertiv just has a better track record of doing that. But I don't know. Maybe Modyne could displace them. Like if Modyne could get to the same scale, that's literally a 5-6x. As literally a 5 or 6x, chat. That could be crazy. All right, y'all don't want to vote. We're taking that vote off. Y'all must not know about them. But okay, so Coherent's kind of mixed with everything. Coherent does interconnects, they do chillers, they do cooling, all kinds of things. The stock is up 80% in last year, 7 times in the last 3 years, and trades at a premium PE ratio. Significant growth expectations and structural versus cyclical debate. It's a very cyclical company. Primary risk is misreading a multi-year structural shift, AI build-out as a short-term cycle peak. However, commentary from hyperscalers suggest that this is a decade-long infrastructure upgrade. The backlog visibility and capacity constraints suggest we are still in the early to mid innings of the growth phase. Okay. This was pretty darn good, right? This is like a pretty darn good write-up. This is a pretty good. What do you think it's missing though? I feel like it's missing a perspective on something. I feel like it's definitely missing like some type of perspective on something. I think it's like a lot of I'm not getting enough commentary around what happened in the last semi cycle. Because semiconductor ETF. Like the semiconductor space, SOXX, has done like a bunch of crazy cycles. Right? Right? Like a lot of mini ones, boom, 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 boom. right? With like steep 30% pullbacks, boom, boom. So if you do have a pullback, you can expect it. But there are like natural semiconductor cycles. And what I'm not seeing is I'm not seeing really good, sufficient patterns of but you can't really draw that good of a connection because we're in unprecedented times. But let's push it. Let's challenge it. I think we need to go deeper. I know we're in unprecedented times, but I think we need to do better at pattern recognition with specific data references from supply chain partners, customers, competitors to pinpoint where we are and, more importantly, where we're headed. From a sector and business perspective, there is still commonalities in the semis cycles, cooling cycles that we can begin drawing patterns from. So go a layer deeper on this earnings call recap memo. Don't ever think that your AI is done. Don't ever think that your AI is good enough. It can literally always go deeper. It literally freaking has the entire world's data at its disposal. It better freaking act like it. All right? All right. All right. Let's see what they say. From call management, where are we in the cycle? The capacity constrained early innings. The key pattern recognition here, which ties cooling to the semiconductor playbook, is the acute supply demand imbalance. In historical cycles, aka the 300 millimeter wafer transition or previous networking booms, the initial phase is marked by demand vastly exceeding available supply. We are in the land grab phase, where the immediate goal for hyperscalers is securing any available capacity, giving suppliers like Modyne significant pricing power and clear long-term revenue visibility. Management commentary confirms we're still in early innings, possibly phase one of a multi-year build-out. The surge in stock prices and the AI infrastructure stack in 2020 mirrors the early stage ramp-up seen in the semiconductor, like Lam Research at the beginning of their repetitive super cycles. Understood. Good. Now, Q3 results were not just a beat, but they were evidence of structural, not cyclical demand. Demand signal, backlog strength, and quote to... Oh no. Uh-oh. Chat, am I back? Oh, I'm back. Uh-oh, chat. My computer just said, oh, okay, we're here. Am I good? My OBS just completely lagged out. How is that possible? You think it's the chips, people? Trying to shut me down? JK, I think I'm back. All right. Gary says, in the technology adoption curve for AI, we are crossing from early adopters to late adopters, which is what you see in the market pullback from the mispricing demand. I agree. I ain't saying you're wrong. I agree, twin. I agree. So the quote to order conversion. Reports following management meeting indicate that quote to order conversion rates appear impressively high, to say the least, with price premiums well intact. Data center sales grew 78%. Boom, boom, boom. When semiconductor foundries are running at 100% plus utilization, equipment lead times extend to 12 plus months, and pricing power shifts entirely to the supplier. Modyne experiencing the cooling equivalent of this dynamic. Hyperscaler foundries, despite the thermal. Okay. Modyne is aggressively expanding capacity. Data center point, you saw a margin dip due to temporary cost.
Pattern link. This is a classic grow faster dilemma. In the early stages of the ramp cycle, you incur costs before you achieve full scale and efficiency and pressure, not competitive weaknesses. Margins are expected to normalize and expand in fourth quarter. Okay. The issue with this AI write-up is that it's now referring only to third quarter stuff. It needs to bring in the fourth quarter stuff. You feel me? But there's not that much data. It was just like one little write-up. Has consistently highlighted the insatiable multi-year demand, AI infrastructure. Vertiv has formalized a partnership with NVIDIA for their cooling for platforms like the GB200, technical complexity. And yeah, Vertiv definitely seems like the better play. Modyne's planned spinoff of its legacy business is a direct move to achieve a similar pure play multiple. The market is vast enough for both to win substantial shares hyperscalers push for vendor diversification. Supermicro Computer has been vocal about the rapid shift to liquid cooling as they push liquid-cooled rack scale solutions, the need for Modyne-specific little components, CDs and chillers. Okay. This is okay. Need more around what's ahead or around the corner, like a proper, like a Julian Robertson trained hedge fund investor. And you keep referencing 3Q. We need to update for 4Q data, which just came out for Modyne and others in the ecosystem. Right? I'm the worst boss to my analysts, especially my AI analysts. Because if it's not perfect, you're going to keep doing this literally until you get it right. You're going to keep doing this literally until you get it right. All right. Now, where are we headed? Structural re-rating. Pattern we recognize, high growth cycle. The most telling signal is the multi-year backlog and the current capacity build out across hyperscalers. I think there's a natural limit to AI's ability to think about what's ahead. I think that's where the human role in the pattern recognition is still going to play. I think there's still going to be a need for like the human component to like take all this information and apply the additional like psychological layer around like what's truly next for this sector. Like what are the data points folks that aren't looking at, you know? I think you can slowly get it there, but I think it's not good enough to give like crazy good feedback. Let's see. Spin off of their low margin segment will create a pure play Climate Solutions 1. And it'll help it achieve a premium AI multiple, similar to Vertiv and Supermicro Computer. Okay. Liquid cooling adoption rate. I like this. The market is set to explode with liquid cooling market growing from 4 billion to 21 in 7 years. And their investment in the space position is perfect for the transition and more M&As. All right. Okay. At KKR, we used to actually own a liquid cooling business that sold to data centers. They're probably going to get a crazy bag of a exit. Because these public players are spending mad cash for it, y'all. Spending mad cash for it. Now, Modyne currently trades at a forward PE that is demanding the risk around the corner, potentially overcapacity issue in the broader industry if every player ramps production simultaneously and hyperscalers suddenly pause spending. Remember that? Remember I said that earlier? If hyperscalers do anything around slowing down their CapEx spend, this entire domino's falling. Because everybody is ramping up capacity and CapEx to serve more data centers and AI value chain, that like if Google, Microsoft, Meta decide like, hey, we want to take a break and pause a little bit on the CapEx spend because we're not seeing as much ROI, this stuff is going to tumble like a domino. Is it going to be the end of it? No. I think it's just going to be a reset until CapEx gets back to normal. But right now, the data is saying that like AI spend and AI revenue is continuing to grow. But the second that you see ROI for AI being questionable, that's when things stop. All right.
So we're still kind of bullish on this. We're still early days. Things are just pricey and expensive, but nothing is saying that the party is ending so far. How y'all like about that, chat? This was like a more in-depth print, right? This is a more in-depth print. It's a crazy memo. I mean, it's good to read though. Like imagine if you read stuff like this literally every single day. You're gonna get really smart in the sector. It's good insights, right? I learned some. I think we're still in the mix with it. All right, it is time to talk about Google. $1 trillion tech wipeout ensnares all stocks in AI's path. They're just literally out here selling fear. They're literally just out here selling fear out. Why they gotta come at the boys like that? I love how they like, all shake hands like that. Jensen Huang said that the software sell-off is the most illogical thing in the entire world. Low-key, that's facts. You guys like my song? Well, not my song. It's called Te Ejido a Ti by Caro Luna. I'll type it in the chat. Hope you have an amazing day, Sparrow. Te elijo a ti by Caro Luna. Te elijo a ti de Caro Luna. Sí. ¿Hablas español? We got so many Spanish speakers in here. Hope you have a good night too. No, unfortunately not. I lost the bit I learned. You gotta get it back. I'm trying to see who has a good little segment on Google. Oh, here it is. All right, chat. So let's hear what they got to say. Bloomberg's got to say as it relates to Google earnings. We're gonna react to that, and then we're gonna look at it ourselves, and then we're gonna quickly apply that exact same thing we did to Modine to our Google playbook. All right. I'm always curious what these Bloomberg TV heads are talking about. But all right, let's listen up, chat. I watched this already, but I'm gonna play it for your benefit. But
we have to start with the CapEx guide. Again, Google, the parent, saying that it will spend $175 billion to $185 billion this year. That had been the estimate of $119.5 billion. Shares throwing a little bit of a tantrum. What do you make of that guide?
I think, anytime that you surprise it with things, which is what Alphabet's doing here, it's a little less constructive than Meta that had kind of pre-warned for 2 quarters, leading into it. But having said that, it's front-footed spend. They're doing very well in search. You talked a bit about AI overview, and they're growing the search business 17% in the quarter. The cloud business was expected to grow 38%. It grew 48%. That's a business that's going to be approaching levels of $100 billion of revenue in 2026. And so I think, there's a digestion period around this spend and the implications in terms of free cash flow and a DCF. But I think this is very positive for the AI ecosystem overall, that this cycle is very much still intact.
Well, when it comes to search, when it comes to advertising, are you able to draw a direct line between the spend that they're putting up with these CapEx numbers and some of the results that we're seeing in these businesses?
So you have two aspects of it. You have the infrastructure spend related to Google Cloud and the acceleration that business is experiencing. And then you have the cost of delivering AI search throughout the business as well. And both are significant costs. The computational costs related to AI search are higher than legacy search, although those costs are coming down. They're still higher. The monetization of AI search is still lower than traditional search.
What are you talking about, bro? Are they talking about anything important?
But the company has said historically that they think ultimately it will be higher. So I think there's still benefits from monetization in search, and I think that it's still very early days in terms of this improvement and growth in the Google Cloud business, which very much justifies the investment. The market has to process the implications of the incremental spend, but it's a very positive implication for Google as a company, and I think for the broader ecosystem. If you referenced a few of the infrastructure names, trading up after hours as well.
So this gets to the idea, though, too. I mean, what do you actually want to hear the executives sort of articulate on the conference call longer term? And I'm not just talking about hard number forecasts, but really about the vision of what they want out of this.
So I think you want to hear that what you're seeing in the reported results, which is that consumers are gravitating to where the investment is going. So on the search side, you're seeing usage of the AI tools, and that's not only true for Google, but it's true across the entire, AI complex.
Dr. Summer, you got to quit with all this rotating. You're paying the IRS the most out of all of us. You and your rotation plays. Just hold Google for the rest of your life.
From a consumer standpoint, and so that's happening, and the company needs to be spending behind that to be able to provide those services that consumers are demanding. On the cloud side, you can see it in Microsoft's results, even though they weren't well received. I mean, that business is growing 40%. This business is growing almost 50%. Tomorrow night, Amazon's going to report a business that's on a run rate to do $150 billion of revenue that's growing up near the mid 20% range again. And so I think that the spend, and what you're going to hear is that this spend is very much justified. And I think that there are data points, at least existing today, that suggest that that's very much the case today. Now,
that's what I'm talking about, though. YouTube ad revenue? It's down. Okay.
The longevity of this cycle, will remain debated in terms of how.
Hey, latest video is out on the second channel, Kenny Finance Live channel. Make sure y'all watch that after this.
Long that
we dive into Elon Musk and his merger, SpaceX and XAI. So if y'all want to see the YouTube ad revenue increase for first quarter, then go watch my freaking videos. Watch the ads.
Acceleration for these companies last, but I think
also, let me put the Discord link in there. Boogie told me to put the Discord link in there because he said some people aren't in the Discord. My bad. I naturally wanted to gatekeep, but I don't think I should gatekeep. Why? Because this is a community for the shred lords, and everybody and all people are welcome. Boys and girls that have the capacity to make sound financial judgment can freaking rock and roll in the Discord. But you have to be nice. The second that you say anything inappropriate, mean, disrespectful, you are kicked permanently.
Most recently for all the hyperscalers are very positive.
It's funny, you mentioned Amazon, and we're going to get their results in about 24 hours.
That guy's got a clean suit, clean glasses,
specifically on
clean
the
tie.
AI front and everything that's been going on with Anthropic. I mean,
where did I lose my way? I used to be so polished, guys. I used to be so clean when it came to just like. I'm gonna let this play, but I'm gonna show you some of my old pictures.
What is their position right now in the AI space? How do you see it?
AWS is still the largest provider of cloud services. It's going to be north of 150 billion in revenue this year. Given its size and given the fact that it's been a little later to adapt to some of these AI features and functionality for customers,
the growth
rate has lagged. But they just launched Project Rainier, which is almost exclusively utilized by Anthropic, and that's going to drive pretty meaningful acceleration in that business in 2026. So I'd say AWS has been viewed as a laggard, but that narrative is in the process of shifting throughout this year. Having said that, I do think Azure and Google Cloud will continue to grow at very high rates as well.
All right. Oh, sorry.
One more, Scott, before we let you go. Apple in January, it announced.
Here you go, chat. Baby Kenny Finance. When I was an analyst, first year analyst. Baby Kenny Finance. That's a Blackstone. So dang clean. Now I dress like I'm a little freaking 15-year-old. What else? Let me see if I can find some more. Your boy was clean. Your boy was clean with it. I was always the best dressed. I had the most riz out of all my friends. No joke. No joke. No joke. Oh gosh. All right, maybe don't show that picture. Maybe don't show that picture. I got pictures of Boogie in here. I got old pictures of Boogie. Where are my things? I got like a suit picture. I got yeah, I gotta delete some of these. Some of these aren't really public friendly anymore. You cleaned up your image well, Kenny Finance. Oh my gosh. Here's like some of my old coworkers. Oh, I don't think I'm allowed to show them. They didn't give permission to be on the stream, so we're gonna respect their privacy. But anyway, yeah, a lot of these have other people in there and private. Oh, this is funny. I take a selfie in this one. This is when they sent me to Washington D.C. to like negotiate with like politicians and senators. I took a selfie in the elevator. I was like, who let this shred lord in Washington D.C.? And then here's a picture with me and my cousin. This is at KKR's office. I had the cleanest suits in the game. Cleanest suits in the game. Now my holding company has a no suit policy. No one has to wear suits. Dress how you want. Be yourself. Vibe out. Shred deals. You know? That's the name of the game. All right, this Google stuff I won't do it my whole life. I've only been trading stocks so much. Oh my gosh. Can someone please? Darkest Sunray. The number one thing you can do. Let me show you something. I can get a bigger long-term asymmetric upside on something else. You're just literally doing it for the fun. You're addicted to the game, aren't you? You're addicted to the adrenaline of it, aren't you? Of the trading. I'm sure you are. I get why you're doing it. You know why? Because I used to be the exact same way, man. I used to be the exact same way. I used to be addicted to the chase. Can we beat earnings? Can we get up 50%? Can we get out? And it makes sense when you're like super young and don't have like a 9-to-5 yet, or like you don't have that like that high of a salary job. But when you're older, man, and you got portfolios of cash flowing businesses and you got a bunch of taxes to pay, you gotta do whatever you can to reduce that tax benefit. One of these days, I gotta show you guys about how to live completely tax-free, doing the buy, borrow, die concept. I don't know if you guys have heard of that, but it's something that the high net worth and like rich people use to live essentially tax-free using their invested assets. But I actually did this already for Google. Oh, Garrett knows. Garrett knows you borrow at 3% while your stocks are growing at 15, 20. Sheesh. Until the stuff hits the fan. That's where it gets tricky. It's all fun and games until it hits the fan. All right. See, I already did this for Lumentum, and it gave me a really good narrative here. but I wanted to give it what we did for Google. Here we go. So, boom, boom. We told it to go deeper. All right. This is good, but I'd like you to dive deeper and layer in context references from the analyst Q&A that happened after the call that currently isn't reflected in your memo. Dollar. All right. Okay. So let's talk about Google's earnings. So when it comes to Google's earnings, we have layered in the context from the Q&A following up on the call centered on a management bill to justify the aggressive $175 billion to $185 billion 2026 CapEx plans. Okay. Boom. Okay. It kind of didn't give me the original summary. But here's the original summary for you guys. All right. This is what happened. So, headline thesis is that it was another strong beat and raise for Google in fourth quarter. The stock's after-hours volatility highlights a core tension and unprecedented CapEx cycle versus the timeline for monetization. The story has shifted from a AI infrastructure land grab to show me the revenue conversion story, right? It's not just about how much you can build and how much CapEx you can spend. It's really about how much that spend is correlating into actual tangible revenue in the mix, you know? How you doing, Chris? Thank you so much for checking in real quick on the stream. Good luck with your homework and your competitions, Chris. Dr. Sunray, you trade off alone? No, you wouldn't trade off alone. It's just the buy, borrow, die concept in 5 seconds is here, I'll explain it for you. But most ultra high net worth individuals don't pay taxes on anything. They buy assets like real estate or stocks that appreciate at 10% plus annually. Once you get to a large enough sum, you are eligible to have wealth managers and bankers wanting to give you loan products that are collateralized by your investments. So if you have $100 million in an investment portfolio going 10%, you can borrow like 30, 50 million bucks if you need it, or even less to cover off your living expenses. And once you take a loan off of those assets, you're paying around 3% interest, but your investments are still growing 10, 15% plus. And then you just let that grow and compound, and you refinance it and pay down as the portfolio continues to appreciate, and boom, you pass it down to your kids. Tax-free. It's the buy, borrow, die concept. It's genius. But it's very dangerous. You got to be very strategic. Does that make sense? All right. Back to this. The company maintained an impressive streak. EPS beat. Revenue of $114 billion for Google. Dang, Google is making $114 billion of revenue a year, a quarter. That's so much. And then their cloud and search business segments were the highest growing. And then the insights from prior calls. So the accelerating CapEx arms race. That's exactly what that's what we're calling this, the CapEx arms race. We're gonna have a deeper segment on this probably tomorrow or this weekend, because we gotta dive into what happens with Amazon. And then I think when Amazon prints, we'll have all of the hyperscalers and we can summarize them and rank them based on CapEx spend. But they are planning to spend $175 billion this year, when last year they only did 85. So that CapEx spend, like, that gives a ton of signal to the market that, like, they're at least here to play the AI ball game for another quarter or so. It won't last forever like that, but they're at least geeked and excited to be in the mix. And they're spending like they want to be there, you know? Amazon is planning $100 billion in CapEx. Microsoft was 80, and then all of them are pouring a bunch into data center powers and servers. So supply chain validation highlights demand from NVIDIA and their GPUs.
Makes sense. Makes sense. While NVIDIA remains dominant, the spike in downloads of AMD's software suggests their chips are emerging. Did you guys see what happened to AMD? AMD got wrecked. AMD got wrecked. Down bad, huh? AMD went down bad. We'll talk about that later. Not tonight, but we'll talk about that probably tomorrow or something, because that's AMD took a beating simply off of guidance. But back to Google. The thesis here is that they're spending a lot. Their supply partners are trying their best to keep up. And their traditional core segments of cloud and search continue to do incredibly well and beat expectations in terms of revenue generability. Now, the question is, we're seeing a hockey stick-like growth for the CapEx spend. When are we going to see a hockey stick-like growth for the revenue? If Google goes down and I lose some money, oh, well, that's stock trading. Come on now, Twinster. If it goes down, buy more. Google's a household name. Google's a household name. Google's a household name. Boom, 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 boom. The around the corner point of view. I like this thing here, the around the corner, because like oftentimes a lot of folks just reiterate information and don't give any context around like what's likely to happen in the future. Right? Like I'm not in all of this to just simply freaking stick to what, used to happen. I want to know like what's around the corner. I want to see like what's popping. You know what I'm saying? Like I want to know what's going to happen after they spend the $170 billion of CapEx. Who's it going to? Who has the capacity? Who doesn't? Who's a good short, right? Who's giving poor guidance? Who's overextended themselves? Not all these names that went on crazy runs are good businesses, right? Some of these can't keep up. You're gonna start to eventually. It's a marathon. You guys ever saw Hunter x Hunter where they're like running in that tunnel where eventually folks start falling off because they can't keep up? It's a marathon, y'all. Not everybody's gonna be able to keep up. Okay, so the monetization, this is what I said. They're going to ask to start seeing some real revenue from Gemini. The margin scrutiny, high capex with pressure on operating margins. Watch that the cloud services can offset those. Waymo, no other bets? Yeah, not really. And then execution. Everybody's trying to execute. Now, so this was what the memo they gave me as soon as they printed, but it didn't have the Q&A. I didn't have time to watch the Q&A. I had a conflict. I had a management meeting. But from the Q&A, here are the key insights. Primary attention on the call was substantial increase in forward-looking CapEx, nearly double spend. So that everybody was asking about whether or not, like, why are they doubling their CapEx forecast? How does the massive 2026 CapEx forecast of up to $185 billion translate into revenue growth, and are there supply constraints? They confirmed that the reinvestments are primarily for AI infrastructure, data centers, specialized computing hardware to train and run advanced AI models. Management explicitly noted that they anticipate continued supply constraints in AI compute capacity through 2026, which explains the necessity of the aggressive capital deployment. This indicates that the demand for AI hardware, NVIDIA, AMD remains incredibly high, and supply is the bottleneck, not demand. Ooh. Jackson, we got to dive into this. Hold on. INMD. Type up real quick what they do and what in quick context. We're going to go to that right after Google. I like crazy emergency situations. I like that. It's special sits. It's a little special sits. Don't even get me going, my guy. Don't even get me going. All right. Now, the monetization timeline. It's important because everybody's trying to figure out, all right, how are we going to make money off of this? You know what's crazy? They're doing all this spending just to charge $20 a month on Gemini. But they have a massive user base, though. It's crazy. So 750 million monthly active users on the Gemini app. Me, us included. Chat Capital, us included. We're sharing the password here. When does AI mode, which is AI overviews and search, drive measurable search revenue? And can cloud margins sustain this build out? Search monetization. Okay. Executives address concerns about potential cannibalization of traditional ads. Outlining. Okay, hold on.
Concerns about potential cannibalization of traditional ads, outlining ongoing pilot programs for agentic commerce. I don't get this. I don't understand this. They're trying to do like AI-driven shopping experiences. That's not going to work out. That's not going to play. Like I've never even literally used the Google Shopping tab. I never even used the Google Shopping tab. You know? That's some crazy work. So, cloud margins, Google Cloud, they charge me a bunch, bro. Google Cloud charges me a bunch. I only have 2 TB. I need to get more though. We're running out of space because we got all this content going. So the Google Cloud operating margins expanded significantly, up to 30%. Attributed to internal efficiencies and utilization improvements. To be this margin efficient of a business and to be Google, which is huge, that's very impressive. Google is a massive, large, global, big company with pretty impressive margins. That's low-key cool. That's pretty cool. And then the Q4 results, stock-based compensation. All right, we don't care about that. Q&A reinforced our view that the Alphabet is in a dominant position with the AI infrastructure land grab. All right, that's the main narrative. Significant investments are a necessary evil. They have the strong balance sheet to fund the CapEx without stress. Long-term upside, monetization rolls out search and cloud. Search given accelerated adoption. All right. Valuation is high. The near-term CapEx is strong margin headwind. Market needs concrete proof in 2026 that the spend is paying off and accelerated revenue growth to sustain the current premium valuation. Okay. Now. Wait, where'd you see that, Jackson? Oh yeah. Including lower Gemini serving cost by 78%. Ooh. Hold on. Who are they working with on the Gemini serving costs, which were cut 78%? Who is being impacted by these efficiencies? Any third-party businesses, stocks that are impacted? Great question. Good question. Guten Tag. All right. Gemini serving costs to internal efficiencies, not specific third-party collaborators. Model optimizations, efficiency improvements, utilization enhancements. The company strategy involves heavy reliance on its proprietary tensor processing units, TPUs. Oh, they built that in-house, though, I think, over hardware pricing and long-term strategy, effectively reducing dependence on external, impact on third-party businesses. So it's a positive for hardware suppliers indirectly, while the cost efficiencies are internal. The overall strategy involves massive CapEx. Okay, that's simple. Pressure on competitor in SaaS. The ability to serve AI models at a fraction of the previous cost allows Google to lower prices for its Gemini services like Workspace, putting pricing competition on competitors. Okay, makes sense. Okay. The efficiency improvements and cost reductions are enabling broader AI adoption. 90% of the top SaaS companies using Gemini as an engine. Suggesting a network effect where Google's efficiencies. Okay. I wonder if I'm in the top 20. No, I'm not. Probably not. We're not a SaaS company. We're a holding company. Internal focus. The general trend in the industry, particularly driven by... Okay, it doesn't really give us much context. Less demand for their own chips internally. Should be an indicator that other companies will see similar efficiencies and lower GPU demand. Would expect NVIDIA down on that. Yep. Rotated in and out before the tape felt weird, though. I'll hold and buy more, but my capital for Google will be locked up until this goes back up. Boy, Darkest Sunray, if you don't keep and hold Google for the freaking 100-year horizon and let that thing compound, trying to trade in and out. We need to put a password protection on your account. We need a password protection on your account because you out here doing all this dang trading, man. Need to do all this trading. The future, I think there will be an AI bubble. Basically, won't be enough storage capacity. The IO will slow down with less use for revenue. Will fall for the still meme AI companies that make slop. I can't stand, bro. Literally, SanDisk has gone up 1,500% because of freaking AI rabbits and stuff all over TikTok. It's crazy. Like, they're using up memory in useless things. It's so dumb. It just really grinds my gears. It's so annoying. It's literally so annoying. All right, that is Google's print, guys. That is Google's print. You know? Google is out here doing the dang thing. You know? Google is out here doing the dang thing. It's still up a lot, though. It's still up a lot. They're a $4 trillion company. Google's been on a great run. Arguably one of the best performing AI businesses of 2025. And Google has a sincere right to win, in my opinion, right? I think they have a clear right to win. Google's dominating the game. They have the customer base. They have Gemini, the AI models. And now, post-earnings, they are the largest CapEx spender on the AI infrastructure and capacity to build out the future of what they think is the future of AI with Google. Now, digging below the surface when it comes to these earnings numbers, I think the number one thing that you need to realize is that it's a race to spend on CapEx to build out the data centers, the servers, and secure the supply chain capacity until it reaches a point where investors want to see revenue potential. That's below the surface. You need to be able to prove that you're not just spending, but that spending is correlating to high returns and revenue. What is the return on invested capital here? Or is everybody just building empty data centers? All right? So while Google is a banger company, Microsoft, Meta, all the hyperscalers are crushing it, the big question is who's spending the most and who will have a high return on invested capital to actually monetize that CapEx. That's what matters most in this space, chat. W's in the chat for that quick summarized thesis. W's in the chat. That's what happens in the Google world. We dive deep and then we bring it back to high level to really understand what's happened. Funny enough, I never really used Google Shopping. You guys use Google Shopping? Let's try it right now. Let's try on cloud sneakers. Wait, there is a stock? Oh, no. On cloud sneakers. What the heck? Yeah. It just gives me way too many options. I guess it is. I guess I should be using this more. I'm not a big online shopper though, so I guess it isn't that crazy relevant to me. It is nice, but I just love the fact that Google has the user base to, like, when they really want to turn on monetization, they can go crazy on it. I think they can go crazy on it. You know what I'm saying, chat? All right, Jackson, you got a special sits. What's happening? What's happening? We need an emergency chat capital committee meeting. What we got going on? Hold on. Hey, Boogie was saying something in the chat too. Kenny, you gaming tonight? I don't know. I kind of got to lock in after stream, so I don't think I'm gonna game tonight. Maybe tomorrow. Or if I am, it's gonna be like later, like 1, 12:30 or 1. You dig, Boogs? You dig? You gotta get a quick little flow state session after stream. But what were we saying? INMD. What do they do? You never tell me what they do, bro. You always give me these crazy situations and all the metrics and all that. I want to know what the business does. Who are the customers, bro? INMD. In mode. Morpheus machines? Bro, how do you find these things? What is a Morpheus machine? The non-invasive weight loss procedures. Oh, Ozempic? Is it like the Ozempic? I've never taken Ozempic, by the way. I'll be the first to admit, I've never taken Ozempic. And I got nothing against someone that does. But I do know for certain that I think it's designed for people with actual diabetes. You know? Not people just trying to look aesthetically cute for Instagram. Okay. No, it's the laser and radio tech that burns fat. I didn't think you were listening. Garrett, shut up. Oh my goodness, Garrett, I just can't be human around you, bro. It's just like, how does this stuff even work? All right, here we go. It's threatened by Ozempic. All right. INMD has an acquisition offer at $18, trading at $15 right now. 7 times PE, 2 times price to book, 1.2 times book value. All right. They do the Morpheus machines. It's the lasers that burn the fats. It's threatened by Ozempic. It sounds like a diabetic with superhuman abilities. Low-key. That's maybe me. Diabetes. Diabetes runs in my blood, actually. So I gotta be careful what I eat. All right. Let's see. Press releases. InMode to participate in this. Responds to transaction rumors. Rumors on the truths. The company is aware. The company is aware of recent market speculation and rumors, including reports relating to the publicly announced non-binding proposal by Steel Partners Holding to acquire 51% of the company's shares. Without derogating from the company's general policy that does not comment on market rumors, the company wishes to inform investors that it is currently evaluating potential strategic alternatives. In furtherance of such evaluation, the company previously established a committee of independent directors to oversee the review process. The committee has independent legal. Okay, what is this saying? They're confirming that the rumors are true. Did they put out a... I wonder did they put out a memo? Sometimes these activists put out public memos. For InMode. Did you see it? Do they have a copy? Oh, no. What the heck did I just download? Where can I find it? Do you know where it is? The 51% offer said that they didn't want to take the full company because they wanted to see more upside in the share price for existing shareholders. Okay. Where's this memo? Where's this memo at? Man, they're making everybody pay. All right, here's my cheat code to find stuff. File type. You made $400 on SanDisk in one day? Jesus Christ. Oh. Oh, here's the memo. Okay. Nice. Okay. Steel Partner Holdings, which beneficially owns Storm shares. We're writing to make you aware that we have expressed interest in InMode's leadership in pursuing an acquisition by Steel Partners at 51% of the company's outstanding shares. 29% premium over the company's closing price before speculation around that. is a diversified global holding that owns and operates businesses across industries and youth sports. Does this guy know what he's doing? A youth sports holdco. This is their companies. This is a holdco that took their thing public. They bought up a bunch of sports leagues. Everyone's doing this, by the way. Like in the search ETA and holdco world, everyone's buying up sports leagues. They bought a bank, Web Bank in Salt Lake City, Utah. Specialty Fasteners, that's a traditional private equity industrial play. Well servicing, workover, and other services to the oil and gas field. That's probably booming right now, but like over the last 10 years, probably sucked. Motion control, that's a traditional industrial PE. Where's the moneymaker? No, not this. Metal joining products? No, not that. Metallic blade products? Maybe. Maybe.
Ready for your next adventure?
Maybe. I'm trying to see. Usually there's like one big bagger that allows for them to just have all this cash to do this. We can actually see. Let's go to their reports. See what's doing well. And what's interesting is a lot of holdco investors don't want to, like, are looking to invest in the same space, but they don't. Well, where's their earnings, bro? They're kind of missing some pages, twin. Kind of missing some pages, twin. Investor relations, investor letters. For the acquirer, I'm looking like for their ability to, like, if they've ever invested in the space before, if there's like synergies, if they like do leadership teams, or if they're going to keep the same management. Because sometimes these holdcos can run these things to the ground. You know? Okay. This is it's weird that they're not giving us anything here. Where is their 10? Where's their quarterly earnings? The dance goes to the names want to film. Current report. Bro, they're not reporting anything. All right. Where in the world are your financials, boy? Let's just see from the 10K from a long time ago. Let's see. They got to produce something. I want to see on a segment by segment level how these things are freaking doing. Okay, there we are. It was prepared by Deloitte. Okay, 400 million in cash. It's down 1.3. Industrial, energy, financial services, and supply chain revenue. Usually these are all broken out by portco, but I think they bucketed all the industrial ones into the same. Let's see if they break it out by underlying portco. Allowance for credit losses. Let's just pick one of the portcos. Let's see. Dunmore. D-U-N more? Yeah, D-U-N more. Specialized film. Yeah, so they don't break out the revenue by it. So I wanted to get like a cool table of like how the underlying financials of each of these things are going, but they bucket them all together. So we can't do that. Anyway, about kids first, business segments. Yeah. It's just it's just like a diversified holding company doing a bunch of random things. seem to make a lot of money and a lot of low key boring stuff. It's just like this is just like every other holdco. They're coming. Okay, so let's see what their work was. See what their thesis is. Unfortunately, we believe that the InMode has underperformed its true potential with abysmal total shareholder returns. Dang, son. Furthermore, it's concerning that despite enjoying the enviable position of having a large amount of cash on its balance sheet, InMode has not taken the consistent steps to consistently return its outsized amount of cash on hand to shareholders. 500 million in cash equivalents, 50% of its total cap, and that's just not justifiable. Finally, it is especially puzzling that InMode has cut its guidance in 7 of the past 9 quarters, including as recently as July 30th, and lowered the top-end guidance for them. They're haters. They're hating on it. Ultimately, we believe that the change is needed to ensure that the company maximizes. They're literally going to change the leadership, strip this thing for cash, and let it literally run until the wheels fall off. Like, that's what holdcos can do. Like, holdcos can just like buy businesses, not mine, like the big publicly traded ones. They can buy businesses, do a bunch of leadership changes, and bucket it all within a diversified industrials bucket, and you can't really tell what's happening with the underlying company. You don't have to disclose it, you know? So they can literally just like strip this whole thing for just cash. I'm pretty sure like I think you did the book value math on it, right? But like those equipment and like their PP&E, it's probably worth like a good chunk. You know what I'm saying? So I don't know. Following the successful completion of the proposed transaction, they'll intend to work closely with the members of the management team and employees to support the next phase of growth. Okay, that's everybody's going to say that. Either there's meaningful opportunities to grow sales organically through increased commercial effectiveness, deeper customer engagement, and continued product innovation. That sounds basic. They will seek the company to targeted strategic M&A. That's where they're really going to spend a lot of time doing tuck-ins, and then any such initiatives would be evaluated with a focus on enhancing long-term shareholder value. That makes sense. These are tricky situations. The question is if anything else is going to come to play, right? Like you got to ask if whether or not there's going to be other folks coming to the table here. It does seem to be like a crappy business to where like once they are seeking strategic alternatives. Like what that means is if they didn't lockstep with steel partners, there is likely going to be other potential bidders, and it's a competitive process. If it's a very exciting business, and think about it conceptually, high level. The business has a track record of stating, we're going to do well and crush it and grow. And then 7 out of 9 times saying, JK, we're cutting guidance. We're not going to grow as much. So they have a history of overperforming and underdelivering, right? We're diligencing the management team's ability to execute. There's a 7 out of 9% chance. 7 out of 9 chance. What is that? What is that out of? What is that? 74, 75%? $77. I was close, right? There's a 77% chance that they're going to miss or reduce their guidance. Like their CEO just, and that's a natural thing. It's really hard psychologically for a leader to like correct themselves on, right? So like going into a sale process, they are likely providing guidance that they're going to have a good competitive process and evaluate strategic options. And what is likely going to happen is that they're going to try to bring things to market and folks just aren't going to bite at it. So they're going to have to reduce the expectation. There's a 77% likelihood that they're going to reduce the expectation or reduce the appeal of shopping around, right? And it takes a while. Like it's not a quick play. It takes a while for
this to happen. Like the way how it works in the private markets is you get a hostile competitive, or you get a hostile activist offer. You then hire a bank to evaluate that offer. And then that bank kicks off a sell side take private process or solicits competing bids. And then there's like a months long journey of inviting other sponsors and strategics to look at the asset. And over time, you start with a wide pool of available bidders. And then more folks drop out the process, more and more drop out the process, till eventually it gets to a point where there's like a drop dead date. And then you see what exists. But oftentimes, the current bidder, if he's realizing that like there's less excitement at the party and folks are coming into the open house and leaving because they're not buying the crib, then they're like, oh, well, you know what? Yesterday's price is not today's price. Instead of 18, I want it at 16. I want it at 15. You know? It's a strategic trick that some of these activist players like to do. Bid a moderate premium for a very crappy, I'm not saying this is crappy, but bid a moderate premium for a crappy asset, kick off the sell side shopping process, get a lot of people around the table, get those people to leave the table because they realize the business is kind of and not an exciting asset, but you have a bidder have an edge. And therefore you can go back and be like, they're like, oh, you know, we did a pro process. Like we didn't want to take your offer originally, but we went and did a whole process. Nothing really came back. Are you still interested? And you're like, yeah, but at half the price now. You know what I'm saying? This is like inside baseball on privates. You know what I mean? So I wouldn't expect, Jackson, this to close at 18 per share in like a month or a week. If it does, it's wow, it's miraculous. But they are likely have already hired a banker to shop this around. And if you are working on the street, you've probably seen their sim floating around. You know, I wouldn't be surprised. You know what I'm saying? So that's how it will work. I would be cautious, but we gotta dive deep into the underlying fundamentals of this. You know? Well, what I think happened, I would expect something like this, folks to be a little spooked at the I think folks would be a little spooked at the macro tailwind of like Ozempic. I think folks will like kind of be concerned about that. But on a broader, wait, the business is based in Israel? I don't know that. Or why is it a Israel publish? But let's see what their thing says. Oh, it's based in Israel? I think also that just like structurally creates some limitations around appetite, like geopolitical stuff. The financials are just beautiful. Where the heck is it then? Why does everyone have this stuff so confusing? 1 billion market cap. That's crazy. I don't know how you find this. You must have an alert for the crazy, funky stuff. Report on firm. Now let's do a 13G. $20F. Oh, here we go. I think that's what we need. Give me that 20F, 20. Nope. 20F. Jesus Christ. I gotta do all this work. Okay. Financial information. It's insane. These businesses are just like so hard to just like look at. Dividends. Okay. There we are. Audit fees. Where are the blue tables? Where are the blue tables? There we are. Let's do. Boom. Here we are. All right. Declining revenue in 2024 by a lot.
Same in the drop in the gross margin profile. Spending a little bit on R&D. Huge sales and marketing spend. 10 million G&A. Financial income. I wonder if they have segment and segment revenue. Damn. I need my focus playlist. Where my focus music? Dum, dum, dum. Check the cash flow statement. Where's the cash flow saying? Repurchase ordinary shares. They do have a fat stack of cash, though. This is actually crazy. I don't think they do segment revenue. Yeah, they don't have segment revenue. Why is this thing so weird to look at? Why don't they make it bigger? Dive deeper into their balance sheet. More receivables, advanced to suppliers. That's a large amount of advanced to suppliers. Raw materials, finished products. 600 of the $1 billion valuation is cash. Yeah, that's insane. So the operating business 400, and it's doing how much in EBITDA? Like, what's the multiple on that? Like 2, right? 2 times? Sub 2 times? This is probably hurting Garrett's eyes. It's hurting my eyes. It's on my screen. All right. But like, thinking about the business, let's go. Let's see what their presentation is. Their presentation is in PowerPoint. Good values. First T, how you doing, legend? Whoa. Here's the presentation, guys. Company overview. Leading global provider of innovative, minimally invasive aesthetic and wellness solutions. RF-based portfolio. Worldwide regulatory approvals. Demonstrated history of profitable growth. Boom, boom, boom. 93 million of third quarter revenue. 78% gross margins. Installed base is nuts. 88 countries. Direct sales reps. This is too high though. I don't know why they have a huge sales rep base. And here's the leadership here. He's the co-founder, CEO of InMode since inception in 2008. He's probably the wrong CEO. He's too tied to the business. Like, these guys need to be retired, cashed out and retired. Like, you need a heavy pharma sales, or like you need like a heavy like med tech device sales CEO. That's just a dog. You know, you don't need these type of cats in here. They're too emotionally tied to the business. It's very rare that the founder is the best CEO for a scaled public company. Very rare. Global operations. Oh, Argentina. There's for Batista. The evolving aesthetics market. My only thing is just like how defensible is this technology though. Because I feel like there's probably, just like how there's innovation in other like med tech devices, there's probably like some, there's probably some other stuff that folks are doing. Looking for comparable results to present, but without the shortcomings of full surgery, including anesthesia, downtime, scars, large population of patients whose skin is not responsive to other skin tightening modalities, affordable office-based outpatient procedure. Ooh. Ooh. Generally every 6 months to 5 years. Drivers of new versions, incremental innovations. Generally every 5 to 20 years. Okay. These are all their competitors. Key diligence area. You gotta diligence all these, see how these folks are doing. Market opportunity. The number of trained physicians. But what's the breakdown between the physicians that already have a device versus not a device? Like this is like a growth equity deck. You're a publicly traded company. Nut up, champ. Nut up, my boy. Radio frequency assisted lipocoagulation. Bro, I don't know what the heck that even means. You just burn the fat. But where does it go after you burn it, though? Quantum leap. This is the issue also though is I know nothing about the technology. But if there's one thing that goes wrong and it proves that this has like adverse effects on like skin health or like human health, this thing literally goes to zero. Morpheus, global awareness and adoption. It's just scary when you have like technology that's touching a body of a human, you know? Like a lot can go wrong. A lot can go wrong. But that's just all med tech devices. I shouldn't be a little wimp about that. You know? Multiple simultaneous treatments. Yeah, new Cereal is needed. This is a growth equity deck. No one cares about this. Like this is cool and all, but like no one cares about this, bro. It's literally just about like what's your free cash flow yield? Like how is your cash conversion cycles? You know what I mean? It's oh yeah, healthcare FDA approval pipelines, bro. It's literally like it's the worst thing in the entire world. After results, he's showing this as if he's raising venture capital. You know what I'm saying? Like I've seen like 100,000 decks in my lifetime, maybe 10x that, and this is very much like a growth equity deck. Historical performance, revenue, boom, 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 boom. What's the commentary? They say high profitability, outsourced manufacturing, long-term agreements with Metamor and Flex for major parts and subsystems. Hey, as we all know, we like to follow the choke points, chat. We like to follow the choke points, right? So if there is real tailwinds in this market, you need to look at Metamor or Flex to see if they're doing anything that's differentiated or if they have a monopoly on one particular piece of the manufacturing chain or if there's another major components that they're providing. Oh, we totally forgot to do Comcast. Yeah, I'm looking at Comcast right after this. And mode quality, medical manufacturing. Luminaries. Boom, boom, boom. Okay, leader in. We also have to keep on. Is this a real business, guys? We got to check and make sure it's a real business. And make sure that these aren't like paid actors. Sometimes public companies just like pay people to just like show their faces on here or like procure these testimonies. So you'd be surprised. You'd be surprised. I'm gonna pass on this one, Jackson. It's just not my circle of competence in terms of like med devices. And like a lot can go wrong. And they're probably shopping this around as like a distressed asset, trying to find some stuff. Like it will be a competitive bidding process if this thing was growing 10% plus with improving EBITDA margins. The business is down in 2024, like 20% or like 10, 15% top line, you know? I know it's a lot of cash on the balance sheet, but it's just like, it's still tricky though. It's tricky. Like that setup doesn't scream a competitive bid process. Oh yeah. Yeah. Like if I were to get the sim on this, I wouldn't even submit a first round bid. I was like, yeah, this is a quick pass for us. I was like, thank bankers for sending this, but I'm out. What did they say on Shark Tank? Thank you, I appreciate it, but I'm out. You know? I would expect bids. I don't know. There might be like niche specific, like what could surprise folks. I wouldn't short this, by the way. Like I know you're probably asking to like come up with a short thesis. What could happen though is there could be somewhere within the med tech landscape or somewhere within their value chain, there could be a larger strategic, like med tech device that focuses on like the obesity market that is that does a strategic acquisition of this, and it's the complete opposite of what I said was going to happen, and they pay $20 a share or something like that, right? You never know. Like they didn't explicitly like. There's no logical fit of like, is this a sponsor play? Is this a strategic play? Who has synergy? Like no one knows what the synergies are. Like if you're gonna really dive into this and understand this one, I would try to understand who are all the large strategics and who needs this asset. If that doesn't exist and it's just gonna be a sponsor play, bet your butt they're probably gonna bid down the asset. I think that's what I would do. So there's like you've introduced the rabbit hole of more diligence and things to think about and sort of like game theory of the acquisition space, especially on the private side and take privates, dude. You know what I'm saying? So it can get spooky, man. So just be careful treading on this one. Yeah. Because now like the job of a banker is to take that offer and get 100 more. So you bet your butt that whoever the banker is, some banker on this, is shopping around a bunch of places. A bunch of places. And we just like the world of privates, unless you're on the street and like you're in the meetings and like you know who has the book and who doesn't, and you know who has synergies and who doesn't, it's a really tough to play as a retail investor. You're literally swimming in the dark. All these things are happening in like closed rooms. It's unfair. You know? Like I don't think there'd be a real way to play it intelligently. So why would they not accept the 18 offer if they can't find a better offer? That we don't know. There could be strategics out there. There could be strategics out there that can bid more than 18. This business, you can consider the 18 as like a lowball offer. Like this company has no synergies at all. It has no fit at all within the holding company for Steel Partners. You know? I'm saying that 18 probably, like, we don't know if it would be the best one. The only reason why they wouldn't is integrity. Keep in mind, the largest shareholder is likely still the CEO and the co-founders, right? I mean, we can find it on here, but like the likely shareholders are still the likely shareholders are still what is it gonna call it? The highest shareholders, they're probably like insiders or like management teams. You know, some shareholders are wanting more out of the company. So and you guys got to remember the personal side to investing in buyouts. Right? Like their largest shareholders probably believe in the CEO and their vision. Right? And like some CEOs are visionaries to say like, this is a bad offer. We can execute and grow. I believe in the thesis. And some of these people have spent decades together, you know? So you gotta remember the personal side of institutional investors, management teams, and founders. But I don't know. It's really that's the beauty of activist investing. It's like literally anything could happen. Like there is no thesis. Like in activist investing, you're playing game theory. You know? But if I were Steel Partners, I would set it up to where like every day you don't accept our offer, we go down by 10%. You know? And if the cap table is just like, get me out of here, the founders and CEO has to listen eventually, you know? But if I'm Steel Partners, 18 is the best that I'll come up with. It's the best I'll come up with. If you want to go take my offer and shop around, boom. Now it's 16 because you disrespected me. And activist investing brings out the worst of personalities, people. You guys got to study Bill Ackman. You guys got to study Bill Ackman and who's the other big guy? Bill Ackman, and he went head to head against Bill Ackman. Yeah, Carl Icahn. Like this is yeah. You got to study these. These are like some OG activist investors. There's the Titan hedge fund. Was it? No, not Titan. There's a different one. There's like all these are OGs. There's Elliott. Oh yeah, Elliott, Third Point, Starboard, Trian. That's what I was gonna say. Nelson Peltz. This guy's a dog. This guy's a dog. Don't let that smile fool you. He'll tear your freaking cap table apart if you piss him off. It's like the most private equity way of investing in public markets. You do what I want, or I will ruin the entire public narrative of your stock. All right. So at a $1 billion market cap, 2 to 3 times EBITDA, would you buy without the offer? Risky and asymmetric? I just don't believe in the moat of the business. You know? Like I just really don't believe in the moat of the company. Like I actually believe that in 5 years there could be a device that does fat burning better that could evaporate the entire revenue profile of the business. I can see that happening in like 2 or 3 years. Right? Because it's like think about the underlying what are they called? The med spas that probably buy this stuff. Or like the doctor's offices and med spas that buy this stuff. They're getting pitched devices every single day. I don't think there's super high switching costs for this. You know what I'm saying? I think for this, I don't think there's crazy high switching costs. I think what it is actually just in terms of like cost effectiveness and FDA approval and consumer adoption and the effectiveness in terms of like how quickly it takes to get the procedure done. And I think with tech innovation, we're kind of just expanding. From what the deck that I saw, this stuff looks pretty archaic. You know? Yeah. Whatever company's flying doctors out Hawaii. Yeah. And like there's a lot of med tech devices that can like ball out on spend. And it's also, you got to keep in mind also there's crazy kickbacks in the med spa space for like devices and all that. Herbalife is like that I don't know how to describe it. It's like the powder business, I think. You got wrecked on the weed or ETF. Well, it's been a good market for marijuana businesses. MLM. Gail Garcia, how you doing, legend? Happy Wealthy Wednesdays. We out here just learning about markets and specialist investments and all that stuff. But Jackson, if you dive deeper into this, you just got to really understand. Like I would build out a little market map of who the logical bidders are and how you would rank the priority of this asset to be in their portfolio. And I think you'll get a pretty clear picture of if this has a strategic fit or who doesn't. You know, or if you want to be sneaky, you just figure out who's working on this deal. Take the bankers out to drinks and see who they're bidding to, who they're pitching it to. JK, that's illegal. Just kidding. It's a joke. Anyway, let's talk about Comcast, shall we? What's your thesis on Comcast, Darkest Sunray? What is this one? Like Comcast cable? We looked at Comcast before, didn't we? Someone pitched Comcast before, didn't they? What the heck is the thesis on Comcast, though? You know what I'm saying? Like, I don't even think Comcast has that much going on. Hold on, I forgot to play my song, y'all. I didn't even play my song today. Probably has to get dividend deal, right? Duvid, what's up, legend? Dude, Duvid, it's late, man. It's late, brother, on the East Coast. Go to bed, bro. Almost 4.5 dividend cap. Darkest somewhere. All right, we got Comcast Investor Relations. So I'm 15 and I want to make money. I know this is off topic. Do you have any ideas you recommend? Spend less than you earn. I would save up to buy a pressure washer. I would have a TikTok if you have a phone, and Instagram, with your parents' permission. And I would go to door, working and doing power washing gigs for driveways, siding, AC units, trash can bins, just to build up some cash flow. As you get some cash from that, save every bit. Put half of it in an index fund for the rest of your life. The other half, buy some more pressure washers. Add another person to your team. Scale up. And then rinse and repeat. And every dollar you get, put into the markets and never sell it. That's a cheat code. All right. Great question, though. That's right. And shovel some snow. Oh, sweet. You just got back from a friend's wedding? Nice. WW. That's sick, man. Hope it was fun. Hope it was a blast. Wedding season is upon us. I got one coming up soon. I gotta make sure that my tux still fits, yo. I gotta make sure my tux still fits. It's in Barcelona. I should probably try to get some content out there. Maybe expensive trip. Let's be real about it. All right, what we think about for Comcast? Revenue. Okay. Revenue's flat. EBITDA is down. EPS is up. Free cash flow is up. They're probably doing a really good job at cost measures. And they have, oh yeah, we did look at this. They have like the Peacock thing. Subscribers increasing. Launch NBA across. Domestic wireless. It just hurts my eyes how all these companies have different formatting of like all these things. It's like stick to one thing. Yep, strong cash flow and dividends. But the question is, they're not growing. That's the only issue. They're not growing. You can only cut costs so much, right? Until you have the last person left in the office. You know? Like, they're cutting and they're trying to invest. Like, they're trying to cut. The revenue's growing. The revenue isn't growing. They're trying to cut to generate more free cash flow. As they cut, they're trying to use some of that free cash flow to invest in either like acquisitions, a catalog, or increasing offerings. But the thing is, they're investing in catalogs that are tough to compete. Like at the end of the day, like this business has to compete with Netflix and Disney and all the other players, and and YouTube, and it's a competition for eyeballs. Right? So whether or not they have the ability to get eyeballs and stay, it's tricky. But yeah, they do. I think that's the bulk of their business though. The connectivity. But videos like close second. You feel me? Like if I were Netflix, I would spin out some of these businesses. I would sell the video business to Netflix. I would double down on the residential connectivity and try to have partnerships with some of the satellite companies that are increasing their They're based there. This advertised business, get rid of this. This is a good take private target. I don't know why activists aren't in this. Like, Jackson, this is where activists need to be playing. You know? Let's be real about it. I mean, I don't really care about how you feel. They have studios. Like, they're trying to be Disney and they're not doing it right. Studios doesn't work. It's like their own stuff doesn't work. Media might be okay. Let's play Kayvon's newest song. Gold chain, a taste to plain away. A little light skin vibe. You see? Media's burning business. Break even on studios. Theme parks. Theme parks is actually doing really well. But it's it can't make up for a bulk of this stuff. You see this? Eliminations, they're cutting a bunch. Good cash flow, but at what percentage is it from actual growth? None of it. I think it's all cost reductions and catalog rationalization. Yeah, I agree. The internet infrastructure is a lot better. The connectivity stuff. This is where the money's at. The business connectivity, right? Like, it's a 50% margin business. Like, I don't know why they would ever want to expand outside of this. Granted, it's competitive. It doesn't grow as much, but it prints. Right? And the EBITDA margins on this is just like, it's tough. The question is like, why would they even waste time trying to do that? So it's like a poor leadership. It's like, this right here is a great example of poor leadership. Like they're in a bunch of households that are connected, you know? And I thought they had the thesis that they can like expand and convert that same household from internet customers to video in media, but you can't do that. It's just literally one button away or a different remote. So they can't compete on the catalog. And I wouldn't. And you're buying the whole business, guys. Remember, like, when you're investing in a stock, you're investing in owning the entire business. You got to think about these questions conceptually around, like, all right, how do I view about a company that is shifting away from its core competency and losing money at it? Like, we need to right size our focus here. So, and I think that's probably why the stock is probably down a lot. It's because of just like poor strategic direction, right? Yeah, it really hasn't moved. Like, when it's something like this, it's kind of like folks are waiting on a hope to see if things play out, and it's just like constant disappointment. And with this, it's kind of just like, it's hard to compete. Versus when you look at something like this over the same 5-year horizon, it's still not great, but a lot better though. And at the same time, Netflix is profitable, right? Like, their cash flow is insane. They're able to entertain a whole $100 billion plus acquisition, a Warner Brothers thing, and a cash offer, right? So they're never going to be able to compete with Netflix on the content side, or Disney, or any of those other things. So they said, logically, just sell it. Yeah. I don't know what's happened to Netflix. Netflix actually is losing share to YouTube. But you know, it's a healthy correction. It's a healthy correction in the media space. The narrative with Netflix is I never looked at it. We looked at it on stream like a month ago. Or not a month ago, like 2-3 weeks ago. The narrative with Netflix is that the subscriber growth from organic has started to grow, like, slow down a little bit. So that's why you've seen the business do a lot in terms of acquisition of like other catalogs, partnerships with creators, and this Warner Brothers acquisition. The big narrative and the question is whether or not the true amazing engine of organic Netflix subscriber growth has tapped out, and they need to shift and pivot towards inorganic growth. And that's never an amazing story to sell. To say that, like, my core business can't grow enough anymore
I need to go buy something else. Right? So it's just the business model is changing for Netflix, and the market's just adjusting to what that new business model is. And as business models change, the multiples aren't as appropriate. Right? 5 years ago, the multiple was very much a traditional online streaming multiple. Now the multiple is re-rating to a media conglomerate that focuses on having cash flow to acquire catalogs. That's a drastically different multiple, right? Damn, I'm giving y'all game. Y'all got me deep in my bag, bro. Y'all got me deep in my bag, bro. I wasn't even supposed to go this hard tonight. Y'all got me in the mix. Just kidding. I love this stuff. Makes sense? It makes sense, Shred Lords? But what I need you guys to do, man, I need you to help me find these cockroach businesses. These small caps that are sitting like, you guys gotta help me find my cockroach businesses. All right, these cockroach businesses that find in these small caps to get a sense of what's happening. And we gotta find the ones that are like super low key, no one's paying enough attention to. They're steady crushing it. They're steady generating strong revenue growth, consistent margin profiles, really good leadership teams in a recession resilient, just defensible market. I'm talking AutoZone. I'm talking fire hydrant manufacturers. I'm talking Southeast Asian HVAC distributors, right? Things like that that are low key with strong market positioning that just absolutely print. Jackson, Jackson, you pitched the Japanese one, right? Bro, I'm still looking for a plug to help me buy that business. That's a good one. That's such a good play. But we got to find those cockroach-like businesses that are literally hard to kill. That's what Alan Meckham focused on. He's one of the best hedge fund investors out here. He's very low key, but he focused on cockroach-like businesses that are just like, they're always going to be around, impossible to kill. You don't need 100 bagger a year. You literally just need like a nice above market rate returns and something that is going to compound and spawn over the long term. You know what I'm saying? So it literally exists somewhere in here. So either tomorrow or this weekend, we're going to look through the entire Russell 2000 with the help of AI, of course. I'm going to train up my models, and we're going to find some good stuff. First, we looked at some of the mining sectors. We actually did check out yesterday's VOD. We looked at a mining business. I don't know who pitched the mining business. I think it was ADEB. We looked at the mining company in Wisconsin or Montana, Derby, Montana, or something like that, that did silver mining, largest producer of silver mining in North America. Mining is difficult. There's a lot of regulatory hurdles, geopolitical risk if you're international, and you're a levered bet to whatever the underlying commodity is, essentially. And my view on commodities is just like you're speculating, hoping that someone else is going to pay a higher price than what you did. But buying the operating asset, you're just getting paid the extra premium in the markets for taking on the operational and capital intensity risk. You know? So it's there's ways to play mining though. Like, you got to find the right commodity. You got to do the right diligence to figure out the map of their locations, of their mines, do the geology work to understand the deposits. And folks just stop at that level, but you got to go a level deeper. And you got to understand the quality of the ores, right? So you got to understand the geology of how much is down there, and then the actual composition of like what's down there, what the actual grade is. And if you understand what the grade is, that helps influence the P equation of your P&L to figure out what price you're going to lock. Because you could have a mine in, Omaha, Nebraska, or Omaha,
Omaha, Nebraska, right? Or Moscow, Idaho. But if that mine has C grade ores of silver, you're not going to get anywhere near like the good spot price, right? And you won't know until you dig it and put it out there. So that's an issue that a lot of folks run into, is that like they bank all of their cash on sites that don't work out, or they do work out, but just not at a quality enough pricing tier that they think they can. Or it's like it takes longer to extract, and when it takes longer to extract, the run up in the underlying commodity price markets has already gone. So they're actually selling this stuff at a downward market price. So it could just get a little tricky. It's just a very, very, very tough thing to time and position in, especially for like all-time highs with commodity prices. Does that make sense, Firsty? Hope it does. But the VOD we had yesterday, I think she would still be live on my YouTube. The VOD we had yesterday, like at the middle point or like back in the later half, A-Dub pitched he pitched the business. You were into some silver and gold mine ETFs? You must have made a killing on that. You must have made a killing on that, dude. But yeah, guys, there's literally something in here. Something in here is just like really exciting. Let's go to the 16th page. I wonder if we can sort it. Can we sort it by market cap? It's got to be something, you know? We can export it into Excel. Appfolio, Sprouts Market. What's happening with Sprouts Market? You want to bet? Kenny, I bet Comcast outperforms Netflix over the next 2 weeks. You're probably right on that. You want to know why? That's a funny comment, though. Kenny, I bet Comcast outperforms Netflix over the next 2 weeks. All right. You're probably right. Because you bet in 2 weeks. I bet in 20 years. I don't care what happens in 2 weeks. You know? You got to shift your mindset from a short-term oriented, what's happening this day, this week, this quarter, to what is going to happen in this lifetime for this business. I'm not buying Comcast stock if I don't want to hold it for the rest of my life, pretty much. It's very naive for me to say. But Warren Buffett fell in love with Coca-Cola very early on, and he still holds it. You know, people are like, I think Warren Buffett said, why is it so hard for people to do exactly what you did and follow your playbook to get rich? And he said it's so hard because it's so slow. And it goes against every single human natural habit when it comes to investing. So you gotta shift this short-term orientation to incredibly long-term and be very patient, and you will see you will outperform everybody else by having a longer-term horizon and thinking fundamentally about owning a business instead of trading. I'm gonna convert you to a value investor. Watch. By the end of my 365 streams, I'm gonna get you to the good side. I'm gonna get you to the good side. I'm gonna start converting y'all. I'm gonna start converting y'all. Lyft and Uber with those robot cars? Heck yeah. I wonder how Uber stock is doing. But you guys hear me on this? We got to start hunting in this Russell 2000 or even something smaller. But there's some good stuff in here, guys. There's some really good stuff in here. We just gotta fiend. We got to fiend in here. We didn't go in here. And we got AI to help us too. I'm gonna find it. We're gonna make a video out of that. We looked through 2,000 stocks to find the best business. And don't forget, this Friday's pitch competition is you need to find the best stock under $1 for one of our segments we're gonna film. We gotta find the best stock under $1. What was I looking up? Uber stock. Boogie, you still around? You sleep. Boogie's probably asleep. I want to play some Arc Raiders. Man. Uber crushes it because like they have an incredible like operational discipline. Like this guy's so good. He's a great CEO. He's a really good CEO. Hey, Boogie's still on? What up, Boogie? How you doing, Twinster? In TRN. Yeah, but we got work done. You know? Materion Corp. What do they do? Multinational high performance material, advanced materials, metals. Need some help carrying you. The heck? Bro, I'm way better than you at the game, bro. Stop hating. Stop hating, Bugs. Nah, Bug is a good guy. He used to be a D1 hater. He's not a D1 hater anymore. Mm-hmm. Can you see the skirt? The small one? Kidding. MTRN's fastest growing area is sales to semiconductors. What are they selling? Check and see you later. Some metals to semiconductors. I love seeing a new name and just being so dumb on it. Let's do the fundamentals. Everyone's literally selling something to a data center. Like, if you aren't selling something to a data center, like, are you even a business? That's crazy work. You did artwork? What kind? Like thumbnails and stuff? Or like real art? I have a cool painting in my house, like over here. I don't know if you can see. It's on my Instagrams a lot. The cool painting. Also, if you guys are not in the Discord, bang that Discord. Get in the Discord. I'll paste it back. Boogie reminded me I should be putting this every 30 minutes. Join the Discord for the Shred Lords. Ultra thin metals between different systems, so that's where MTRN. Is this similar to Photomask? Here, I'm gonna ask my my analyst. I have a semis analyst. My semis analyst is. Let me see where my semis analyst is. Here it is, my semis analyst. I want you to apply the same long, short, tiger, cub oriented diligence and rigor to MTRN stock. Give me a investment memo and discuss the role within the value chain and competitiveness of the business model. This boy sound hurt. This boy sound hurt. All right. Materion. Boring business case. Oh, look at this. This is how you're doing a boring business case for a long-term value-oriented investor. Investment thesis is built on its control over strategically vital rare raw material, beryllium, and its technical defect. I wonder what the availability of beryllium is and how intensive it is to mine it. C-Bands, what up, twin? How you doing, champ? Hope you have an incredible evening, sir. I am thinking of starting a business that rents party equipment. Do you have any quick advice? Of course. What's the pitch? Why start one instead of buying one? Everybody knows my thoughts. Oh, hold on. Chat, did we find a vibe? Hold on. Hold on, chat. Every time Garrett puts in a new name for us to research, there's always like a vibe. There's always a vibe. I'm saying as a long-term hold. Mock Fella, what's up, champ? Silicon mining is core to semiconductors? Facts. So I trained this Gemini person to be, you just got into your flow state. Garrett gets into his flow state every single night at like 3 a.m., 2 a.m. You're such a night owl, bro. What time do you wake up? See, Ben, so we buy equipment, then rent them to people having birthdays. That's okay, but it's not a defensible market. Like, what's gonna stop someone from getting the same equipment? Garrett, please get better sleeping habits, bro. Please. I will shift our streams earlier if it helps you. I can't be having you getting 1 hour of sleep, bro. I remember one stream you stayed up till like 5 or 6 when I was gaming. See, Benz, the key is if you get equipment, the equipment's at a fixed price, and you're at the liberty of the manufacturers. But if the customer segment is not really defensible and anybody can buy the same equipment, naturally people are going to go to the cheapest option. So there's a war on price. So it can be tricky. Unless you have like a very specific niche, limited party equipment thing, right? Like if you're like, we're going back to the vibe, but if you were like a first mover in the, like, if you were like a very first mover in like the video game trucks for birthdays, you could have probably charged a killing. But then everybody started launching video game ones. But if you're like a first mover in like the pop-up golf hitting range ones, then you could have charged a pretty good price. But now everybody has those, right? So it's about timing the market and the inventory, and you don't want to have a lot of cash in your business tied up into inventory that doesn't actually get utilized. So like I would just do research on like what is the most utilized party equipment and try to find the cheapest pieces of equipment that's like safe and stable for the consumers to use, and then try to work on your pricing, and then just outmarket and focus on the volume and get as many customers as you can. Just outcompete on marketing. Just get a bunch of content on it. You know what I'm saying? Let's see if we can find another good vibe. Let's see if we can find another. You guys know really good copyright-free music? I used to play a bunch of our regular hip hop stuff, but YouTube yelled at me and they were like, "Oh my gosh, never do this ever again." You know? What about this? Just catching the vibe. Of course, that's what we're here for. Smart money moves. Everybody hustles to make smart money move. Join that Discord. I paste the link somewhere. I'll pin it up for you guys. But there's I don't know why you guys are all on and in there. It's Lily Shredlers that look and talk just like us, and everybody's doing the exact same thing. They're building businesses. They're working hard. They're buying companies, investing in stocks. It's a good, safe community for us. Yeah, I'm not either. It's just I kind of like have to. YouTube doesn't let me play it, yes. I'll write you a song if the executive produced it. My name is Darkest Sunray. I like the Comcast play. Not the media, though. Just communications, though. Because the internet's good. And you can get you some satellite partners and launch that stuff, too. Subscription revenue on the mobile. As you guys can see, I'm a holding company guy. I'm not a rapper. I can be, though. If you give me time to focus on it, I can do anything I put my mind to. No, I didn't get a strike. Because it's what I do is I mute the segment that the music was playing, and they're usually okay with that. But they tell me like it's just like don't keep doing that. Eventually they're gonna strike me. Eventually, but this is good actually. We're gonna add this to the playlist. We just keep like finding songs that are like good little vibes for it. I got a playlist called Chat Capital, copyright free. Fire in the boat. Oh snap! See, Ben's got a couple businesses. Hey, let me get one of them. If they cash flow, let me get one of them, twin. Let me get one of them top dog. Everybody hit that like button and sub up, man. We out here making smart money moves. Mock Fellow. Are novelty vending machines any good? Absolutely. You missed it. F-Berg was in here. F-Berg was in Norway the other day. I don't know if F-Berg is still in here. It might be too late or early. But F-Berg saw a bike cleaning vending business in the Netherlands or Norway. And we looked at that, and that's a really attractive business. So I would check out that, Mock Fellow. Other ones that are cool that I see now are like the bouquet of flowers, but like you're tied into a bunch of inventory, which is not always the best. Wait, that was a really good song. I like that one. Okay, now we just got to keep finding that same style of guy. What about this? Dude, keep making it. Darkest Summer, just keep making it. Literally, bit by bit, bro. You might not be making money off that catalog right now, but it's about like what that catalog looks like 10 years from now. The key is literally, if you guys are doing anything content related, fall in love with the process, have fun with it, and then keep being consistent for like 10 years. The key is stay longer than your competition, and then you'll win. But more importantly, just keep having fun with it. NVE? Oh, wait. Here's our thesis, by the way, guys. I got sidetracked. Near monopoly, exclusive control over beryllium reserves. You gotta figure out how many more of these and how capital intensive it is. You know? Strong brand and equity. Good margins. This is a good one, Garrett. Low key. Do some work on this. Do some work on this and pitch it. Pitch it for the portfolio. Just think about the hold period though. Because this could be like all these semi names that we're looking at, guys, is literally like a 1 to 3 month hold, low key. Like it's like a quarter by quarter thing. We got to be monitoring this stuff daily. Like we got to monitor this stuff daily. Oh yeah. Everybody, Darkest, put your artist name on there, and put your artist name on there, and we'll support your content, bro. I don't know if I can watch it on stream. I don't want to get copyrighted, but when do I stream? I stream every day. Typically around 6:30 Pacific time, 9:30 Eastern time. And we usually stream for about like 3-4 hours. It's work hard, play hard, where we spend most of the time talking about what's happening in the markets, key pitches that folks have. Like as you see, people keep putting in like tickers and names. And we just go through the process of like looking at diligence and like understanding the company fundamentally as a value investor. We spend very little time thinking about charts, but we think about the deep, drivers of a company, unit economics, and the industry. And then sometimes we have dedicated segments and competitions where like this Friday, we're going to do a penny stock search and just like go through the funny example of like seeing how crappy penny stocks are and try to find the best one. This weekend, we're going to go through the Russell 2000 and find a stock there. Sometimes I'm going to do some IRLs. I want to show you guys some houses here in Newport. I think that'd be a cool daytime IRL segment. Show you guys the bougie lifestyle, Newport Beach. Oh snap! Wait, okay. So Darkest Sunray, if you're a good producer, like I'm looking to make a really good like intro outro vibe. So DM me on Discord or Instagram with some of your stuff, and I'd love for you if like you make the kind of music that we like to help us with intro outro vibe that's custom to the channel. You know, this guy's actually kind of good. Hold on, let's get another one. What about Hace Tiempo? Hace Tiempo. You have a great intro outro song you haven't used yet? Flip it. Everybody thinks I'm Hispanic in here, so I keep up with the narrative. Oh, you said your best. Okay, I'm just catching up on the wings now. See, Ben, your best cash flow right now is a YouTube channel, Overdrive Forza. Make content on Forza. Congrats, man. The type of content you like, you make money from, you don't enjoy it. It's all right, man. Treat it like a business. So you just gotta clock in, make that content, put it out. Nah, he's too loud. Treat it like a job. You just gotta do it, and then use some of that cash flow and freedom to do your passive projects. You know? K-Toss. But Garrett, I like this name. I'm just worried about the capital intensity of it, and like the availability of the deposits, and like what's stopping someone with more cash. And they wouldn't want to build something like this, but let's do like if you got conviction, and let's do a little formal pitch on it. Just doing quickly the scan of these. Oh, this one's tiny. How y'all finding a $300 million market cap business? Spintronic Devices. I'm just blown away. Chat, you guys are like actually so impressive to find like these super random niche businesses. It's just like solid. How do you guys find this stuff? What the heck? I swear, it's just like Jackson and Garrett and ADub are always hitting me with like the most bespoke businesses in the entire world, and I would have never thought these existed. But that's where the money's at, y'all. Like the analyst coverage, like look, no one's covering this thing. Literally 2 analysts, 1 person from Zacks Research. That's not even a legit firm. You know? FTAI. Took a rip this year though. Aviation. Fortress Transportation Infrastructure Investments is a corporation. Owns and maintains commercial jet engines with a focus on maintenance, repair, and exchange. This is ADub. This is very equivalent to GE Aviation. Remember? So, what I would look at for this play is like see if they're doing the mostly new equipment sales or the servicing. But if they're doing the equipment sales at cost, and then the higher margin service sales, and they have like a pretty good market share in whatever kind of flights they're using, they're probably likely doing private flights. I don't think they're doing like Delta style flights. So if they have like pretty good market share in like private or like smaller aircraft flights, then it could be compelling. But they also have a big chunk of like an aircraft fleet, so that makes like the P&L funky. So this is like a weird tech op style business that has all this kind of stuff. So I'll just look into that one there. K-Toss. We out here making smart money moves. I like that. I like focus music. Give some of your music for give some of your music to Garrett to help him stay locked in. Tech Maestro, how the heck you doing? Tech Maestro? Hope you're having an amazing evening. K-Toss. Who said K-Toss? Garrett? K-Toss. Kratos Defense. Let me see. $15 billion market cap. Yeah, these things are probably nuts. These things are probably terrifying in actual warfare. You don't want to mess with these things. You don't want to mess whoever's got all these. But I wonder how these things make money though. Like, is it all just like government grants and stuff? Oh, Instagram, Kenny Finance. I am Kenny Finance. Are you talking about my Instagram? Oh, you're talking about y'all Instagram. Y'all talking to yourselves. I didn't even talk to me. Go ahead. Hey, go ahead. Go ahead, Twinstas. They got some wild drones. They got some wild drones. Hey, but bring y'all best ideas. That's the point of Chat Capital. And the cool thing is the way how it works. I don't know if I told y'all. The way how it works is, yeah, I knew it. That's what I figured. Department of Defense contracts. All of the money that we get on Chat Capital that goes onto that link that you might see on the Streamlabs link that goes directly into Chat Capital for donations. And it does not constitute equity or ownership or anything. It is just a generous donation. And just like how other streamers make some cash from donations, they take it and they spend it. All donations I get, I'm not spending it. I'm just leaving it in Chat Capital. And so that's the thesis. And the goal is to have that one day hit $1 million. That would be so epic. But I want to show you all literally by actively investing it, how compounding in smart diligence and investments can scale and grow. And no donation is too small. We have our biggest donor, which is A Boogie. He puts a bunch of cash in there every now and then. We appreciate his support, and other folks like Rich Topic and them have donated a bunch. So those are our OG LP shred lords. So I appreciate them. But our portfolio, you guys want to see our portfolio so far? I gotta update it, but our portfolio is what do we have? Chat Capital, not chat. Chat Capital. Boom, 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 boom. This is everybody's goals. I know I see a lot of new names in here, and we put everybody's goal in the chat. So if you haven't put your goal yet, put it in the Discord. We're gonna add it to it. But right now we got these. We got to add the latest trades of what we did. But we own Clorox, we own Modine, GE, and we wanted to buy Indra so freaking bad. We wanted to buy Indra so freaking bad, but we can't because it's Spanish. But I love this name. This Indra name is really freaking good. That one and the Japanese one are my favorite pitches so far, guys. And wait, so like that's the premise of how it works. So like that $1,000 is like all invested into our different investments and names. We pitch it every weekend. So we're gonna pitch names. So like as names are coming across, and I'm like, look into that, or like spend some time on this. Garrett, A-Dub, Edwin, all these other guys are like gonna like take their time to explore and see. And then they're gonna pitch it. And the way how pitches work is anyone can pitch a stock. Anyone can pitch a stock. And you have to submit it into this form here, which goes here, and it goes directly in. Oh, we got a bunch of new pitches. Dang. Hey, y'all, we got a lot of new pitches. Oh, shoot. We're going to have a long pitch week this weekend. But it's oriented to train you to think like a value investor. So you're not going to pitch just a name and a chart. What you're going to do is you're going to pitch the ticker, the price target, what your investment thesis is, what the moat and competitive advantages of the business, what the risks are, how long we should hold it, and things like that. So if you want to pitch, anybody can pitch. We're going to do that. But I take all of our pitches and I put it into our pitch deck. So this were the pitches from last weekend. So people pitch Daikin Industries. This was the Japanese HVAC equipment business, banking on the Southeast Asian growing market and demand for AC. This was lithium, which was a lithium mine in Nevada, I think. Then GE Aviation. They are the largest providers of engines, and they have their engines in 3 out of the 4 commercial flights, which is crazy. And they sell the engines at cost and make the money on the high margin repair and maintenance on those engines. So this one actually passed. So we bought this. The Modine Manufacturing, they do the thermal cooling solutions for data centers. We voted on this one. We bought this one. Indra Sistemas, such a banger freaking name. Okay. All right. I'm excited for that one. Keep me posted on that, A-Dub. But Indra does IT services in Spain, and they serve the Spanish government. And, they're focused on also like managing the IT programs around like traffic management systems and like air traffic stuff. So it's a pretty dope sleeper banger name, and it's sick. It's so good. That was a really good pitch. And then this one here, this was a cockroach business. So cockroach businesses are the ones that like are hard to kill, but we intend to hold for a very long term. And I don't see Clorox going away ever. So it's at a distressed price right now, and the long term hold could be cool. But yeah, people put in their thoughts and their theses, and we pitch it. And I think Sunday's what we're gonna rock with. But then I got to update our tracker here of our portfolio. And that's how Chat Capital works. We got to add to the watch list though. What do we got to add to the watch list? We got to add. What are the names, guys? And here's the watch list that folks are just like really excited about that we got to add. So there's Caterpillar. Then there's FTAI. What was the good one that I told Garrett about? Where he told me about? There was was it NVE? No, it was the M1. This one with a MTRN. That one. Those are interesting. What else? What else? And these are just like names that we just like keep track of every now and then. Yeah, Clorox is interesting. Yeah, MTRN. Indras, Caterpillar. Yeah, they went crazy during COVID, bro. They went crazy during COVID. But that's the issue. Like the stock is just resetting post-COVID. Yeah, the stock is just resetting post-COVID. All right, Jesus Christ, Boogie. I will update the tracker. Jeez, sound like my principal. Can we see your stock portfolio? Yeah, that's the Chat Capital one. If you guys want to know my personal stock portfolio, my largest holdings are Google, AMAT, Momentum, and then index funds. But I spent a lot of time, months on those, and I've been invested in those for a long time. So they had a run, and I don't want, Oh, what about Katos? Did you say Katos? Should we do Katos this one? Was Katos, were we excited about Katos though? No, not really. It's the defense one, right? We don't want to be tied to defense. I don't think it's worth putting on Chat Capital watch list. And my role as portfolio manager, help us avoid some of the crazy businesses. You know what I'm saying? Garrett said, I sleep through bad markets and get my gains when the markets are up and I'm awake. C-Benz likes activities like outdoor projectors, photo booth kits, activity. I'm so behind on the chat. But Shred Lords. We're looking at Caterpillar tomorrow. I think Caterpillar has a cool thesis. On biz that you like? None of them are tech software biz. How come you don't personally invest or buy tech or software businesses? Because my public portfolio is predominantly tech. Right. So my personal thing is I have Dreamline, and then I have Dreamline is my holding company where we buy the private businesses. A lot of those are like boring service, industrial service businesses, utility services, like boring cash flowing, just cash cows. And the strategy is use that cash cow from those businesses. And a lot of the kind of businesses I like, I talk about in our main YouTube videos. Those then flow, the cash flow then flows into the public bucket for Dreamline, where we invest in the public names. And naturally, I'm just overexposed to tech. I think 80% of my exposure is in tech right now. So pray for me. So that's why I don't feel the need to buy private tech companies or software companies. Because my public portfolio is a lot of tech. Because Google, AMAT, and Momentum are all tech and AI focused. So aerospace and defense, yeah, but it changes with the administration, right? So we just got to be mindful. We just got to mind the clock and regulation and contracts. And it shifts with geopolitical tensions as well. And it's competitive because like they all have they're all flush with cash, and they're all innovating and building different types of hardware and industrial stuff. But if you can find a high margin business that's capital efficient with good sticky customers, that is like less susceptible to the geopolitical swings, then that could be cool. But if they're all a bunch of Northrop Grummans, that's tough to play. That's why I like the GE aviation play within aerospace. I think that works. You know what I'm saying? But yeah, chat. That's how we rocking and rolling, chat. This is Chat Capital. That's how we roll. That's how we roll, y'all. So we just out here making smart money moves. Let me show y'all one of my favorite songs. All right. I gotta give you a nice little outro scene. But chat, another 4-hour banger. I'm getting used to these 4-hour streams. This weekend we did a 6-hour one. That was fun. That was fun. But Shred Lords, it's my favorite song. It's copyright free, but this was fun. We went in the weeds like we do literally every single day. You know, you're right. Darkest Summer, you're absolutely right. War is negative to think about, man. We gotta think about peace. We gotta think about love. There's a lot of darkness out there in the world and in the news. So, whatever you can to promote peace and love and happiness and combat violence with a smile and love and peace, do whatever you can. I challenge literally every single person to make someone else's day better tomorrow. And I challenge you yourself to make sound judgment in whatever you're doing. We out here just making smart money use, y'all. This is day 35 or 36 straight. We're streaming literally every single day this year. And I hope to make everybody smarter through our streams. So I'm about to go have me some ice cream. Watch me some solo leveling or free run. But I hope every single Shred Lord here has a fantastic, safe, lovely, and peaceful night. As always, I want you guys to take care of yourselves, your mental, your spiritual, your physical, your emotional. Take care of your people. Support your friends. Support the community. And Shred Lords, keep getting after it. Wake up day by day and know that you can live a life of abundance if you decide to. So let's freaking get it. Take care of yourselves. Take care of each other. Peace and love. And I'll catch you Shred Lords tomorrow, all right?